Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, everyone. How are you? Good to see all your lovely usernames. I can't say faces because I can't see you. Some of you, I can see your faces. Let's see. Prettiest faces in the audience this morning. Hello. Hello, everybody. Can't really see your face on this one, but I can see your face on this one. Morning, everybody. Good afternoon, wherever you are in the world. Hope you're doing well. Hope you're trading safe, and you're here because of the same reason that I'm here. We're going to be watching the CPI report come out this morning and the potential impact that it could have on the markets. I mean, everything's going to move off this. We can break this all down. We can discuss some charts. We can look at some things. We will look at gold. We'll look at the NASDAQ. We'll look at the SP500. We'll look at the dollar. We may look at some currency pairs. I have an interest in watching oil because I'm currently long oil. I do have a USO position, which is the US oil ETF. So I'm long oil. I do also have a long NASDAQ position, which has been going well. Let's see if that persists today. The Russell's up a little bit. I have some long positions in Russell as well. Chinese stocks are up 1.7%. Indices are flat here, awaiting the news. Dollar index is about flat from yesterday's gains, but holding steady here, just above where we had our resistance marked up. How does CPI affect oil, and where did you enter oil? So I entered oil. I sent a signal yesterday in our VIP room. Yes, I do offer a signal service, and yes, it is on live, real traded accounts. No nonsense. Again, I took this trade yesterday in the signals room, and oil popped beautifully. I'm not going to pretend that this is what every trade that I sent looks like. Nobody is a perfect trader out there, but I loved this setup. I was waiting on it for a few days. Came down to my level on the daily chart, hit that support level. Boom, we're in. Let's see if it follows through to the upside. In fact, I may actually choose to trim my stop loss. In fact, I'm going to do that right now because that is just good risk management for me to do ahead of a CPI report. So guys, I'm going to trim my stop loss on this, this trade that I sent yesterday. I'm going to put it just below the wick low of yesterday. Because I don't want to stay in the trade if it breaks back underneath. I want this thing to follow through. So what I'm going to do really quick, bear with me for just a second as I do this. I am going to just go ahead and, sorry if you can hear a bunch of weird noises. I'm just going to trim my stop loss. So on the signals room, bear with me. If you're someone in our Discord, I'm going to send out a notification, just trailing my stop loss just a little bit. I'm not trailing it into profit. I'm just trimming my stop ahead of CPI on my oil position. Trade update. So I'm moving my stop loss here to 71.70. 71.70. Trimming my stop below yesterday's swing low ahead of CPI. Okay, so I'm trimming my stop on this. Let me just send a screenshot of this as well. So give me just a second. Boom, bam, 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 bam. Okay, just going to, and I'll show you guys the Discord in just a second. Okay, that looks good. And let me just, last thing I'm going to do, I'm also just going to trail my stop loss right here. So we're going to go down to the 4 hour, and I'm just going to put my stop loss right below, create new order, sell stop at that level for 300 shares of US oil. Good till canceled. Sell it. There we go. Okay, so up to date on my oil position that just got shared inside of the VIP room. By the way, we will be trading all day long inside of the signals room. If you'd like access, yesterday we did a discount for the FOMC event on stream. If you guys want access to the Discord, we'll honor it here this morning if you send us a direct message during CPI. We'll drop the link here in the chat. Someone from our team, I believe Emily, is able to assist you if you'd like to get access to the Discord. All of the notifications we're sending go directly to your phone, to your desktop, etc. Come join us. I just trailed that stop loss that we took yesterday on oil. And let's see how this one goes. Now, that's just one trade. We got a lot of things running real hot right now. I'm long the NASDAQ. These things could completely give back some gains today, guys. Let me map something out for you. If you get CPI hot this morning, like higher than expected, forecasts are 2.3, okay? If you get CPI this morning that's like 2.5, like it doesn't move because it's currently at 2.5. If it doesn't move from 2.5, the market's going to say, oh, rate cuts are going to slow down, and certain areas of the market won't like that. Gold will not like that. But if you get the opposite effect, if inflation comes in at 2.3 or less, I would say the party continues on. Specifically for stocks. That's what I meant by that. Like if you get inflation that continues to just kind of cool in line with expectations, again, let's map out our inflation. It's important that you understand the context of these things. I put out a tweet this morning. Most traders just are scared of the big word CPI, but they don't even know what that means. They just know, oh, CPI make market big boom, right? That's just like monkey brain stuff. Don't, understand what it is actually telling us. It's giving us a reading of US inflation, which is really, really important to the economy. We've had falling inflation. It's been a positive thing for the state of markets. So as we get close to this event, what I want you to understand is that we are likely to see trends continue if the trend of inflation continues in the downwards direction. So what do we want to see today? Well, it depends what you are trading. But if you are like me and you're bullish on the indices and have been sitting in some positions, right, then you want inflation to keep cooling. Inflation will help interest rate sensitive names, companies, indices. And you know what inflation cooling would help a lot? Well, I know a lot of you guys care about it. Gold. Gold would go up most likely if you get more cooling inflation data. So as we scope into this next inflation report coming out in just 5 minutes, it will have big impacts on many charts. How correlated CPI and oil? CPI, all markets to some degree are impacted by CPI, right? Oil, how would CPI impact oil? Well, falling inflation would probably be good in some ways for oil and so-so for other ways, because rising commodity prices usually are, they benefit from rising inflation, right? Commodity prices will typically rise with the rest of them if inflation is very hot. That being said, oil is unique because if inflation is cooling, the world's economy could kind of pick up the pace, and a stronger economy in the world, what does a strong economy demand? Oil, right? We all use oil to move around, and everything you buy at the store uses oil to get there. Oil is like still a central piece to our entire, humankind. So if oil prices, if inflation cools, global economies might see some relief and oil may actually go up. If you want an easy example of that recently, look no further than the Chinese stock market. Look how correlated this move is. Huge move up in the stock market because the Chinese government mentioned a bunch of stimulus could be coming, right? What did oil do? Oil popped. Why? If the Chinese economy is booming, if it's coming back, the Chinese are the biggest manufacturers in the world. They're going to demand a ton of oil, okay? So, yeah. Please let me just say something, guys, in the chat. Every single month, I've done this since 2018. Every single month. No offense to Pratik or to History Haven, but these types of comments are dangerous. Don't gamble. Don't full port. Don't waste your money trying to gamble on CPI this morning, unless you fully are aware and having a fun time. But honestly, why would you gamble in the markets when you could go to a casino where they serve you drinks while you lose your money? Don't gamble on this. Nobody knows what CPI is going to do. We are all waiting to see what happens and trading the aftermath. If you are somebody full porting moments before the news, God save your soul. Like we can't help you. Okay. You're beyond helping at that point. Don't do that. If you are somebody who is serious about this stuff, let's look at the inflation numbers together and let's understand what trends they may set up for the coming weeks and months. Does that make sense? Are we on the same? Can we get a spam of yeses in the chat for anybody who is new and watching the stream? Can we help them out by spamming yes if you agree that gambling on CPI is a quick way to the poorhouse? Let's all be on the same page. Don't be an idiot. Don't lose a bunch of money. Every single CPI, every single NFP, every single FOMC, my DMs and comment sections are full of people saying, Nick, I blew everything on CPI. I blew everything on FOMC. I'm looking at you square in the eye. You specifically. Don't let that be you today. Please don't do that to me. I get enough of it. Give me a break. Okay, look at all the yeses in the chat. Okay? No gambling today. We're on the same page? Good. Jesus. Okay. So again, I have to relay that message. It feels like every single day. I know people want to get rich. People want to make quick money, but the markets are not for you then. The markets are not for quick money. The markets are for slow and steady building wealth over the years, not over the next 5 seconds. I get it. People are always going to gamble. They're always going to do their thing. I can't stop them, and I'm not here to stop you. You do what you want. You're an adult. And if you're not, what are you doing here? This is not a children's channel. And we're going to see some pretty violent acts on the screen in the next, 1 minute. So, viewer discretion is advised. Let's switch over here, guys. We're going to watch the all markets view. We do this for every news event so that we can watch the spikes together just to see what happens across all different market planes. We've got stocks in the left side. You got gold right here, dollars right here, silver's up top right, and you've got oil bottom right, guys. Don't go anywhere after the spike. We will be breaking down what this data actually tells us. The real analysis starts in 1 minute. So a lot of people are going to leave right after the spike. All the spike junkies, all the gamblers are going to leave right away. Don't be one of them. Stick around. Let's learn something together. It's totally free. Breaking news coming in. All right, let's see. CPI coming in here now. Dollar index is higher, indicating potentially hotter than anticipated inflation. But the moves are not huge for the S&P, NASDAQ, Dow Jones. Gold and silver are up. I'm going to go ahead and throw my guess out there that we got 2.3. 2.3 is my guess. Let's see if I'm right. 2.3. Price action reaction tells me 2.3. I could be right. I could be wrong. 2.4. Okay. 2.4. So inflation cooling, but not quite as fast as people were anticipating. So what's that going to do? That's going to likely be somewhat, well, actually a really clear reaction here from the Russell. The Russell, which is very rate sensitive, doesn't particularly like that. What is a bit confusing to me, why does gold like that? Why is gold up on inflation not cooling as much as expected? I'll tell you this, right off the bat, where I'm most convicted currently in the markets, I'm long the indices. This doesn't change the story for me. Okay, we got 2.4 rather than 2.3. Big deal. We're still close to 2. Fed's still going to cut rates, maybe a little slower, but company earnings still good. So with the stock market side of things, any dips are actually a blessing for me because then I can find some opportunities to maybe get long. Interesting reversal here on gold. This is not your friend. If you gambled, not your friend. These candles are horrific. The only people that like this kind of candle, do you know who they are? Options sellers like those kinds of candles. When you sold premium here right before, you loved that because then If there's no movement and you sold options, those options become very cheap, very quick. And if you sold those options, you shorted the options premium, you looked great. Look at that ugly, ugly candle. Again, if you were somebody gambling on this, you may have learned a lesson today. And I don't say this out of spite or out of being, trying to criticize you or anything, but let it be a lesson. If you are somebody who tried to be quick with it, try and be, you put a short order out there immediately and you gambled on it. I mean, again, we tried to warn you as a team. As a team, we all spam yes in the chat. No way we're going to see 50 basis point cut. Yeah, I mean, I'll tell you straight up, this move on the dollar. Let's switch over to the dollar view here for a second, guys. Also, oil trade still doing just fine. Let's do a P&L check on USO. 650 on this one. NAS and S&P just slightly lower here this morning. Dollar index just about flat on the day. Was up, came down. Let's watch the dollar pretty close. This really holds the key. I'm actually a bit confused by the gold situation. Because in fact, if this pops up, guys, today, in my opinion and in my trading approach, potential sells could make sense up in this 4-hour resistance, right around 2630, let's call it. So if we get a pop on gold here this morning, I may actually look to sell that pop. Because this CPI coming in higher than expected, even though it wasn't by much, still, I already had a number of reasons to potentially look for gold sells. So I'm going to watch that today. That's on the watch list for possible setups. So if I take that gold trade, if I decide to do that, I will share that inside of the VIP room. If you're not in the VIP signals room, we're doing a big discount here for CPI. If you guys would like to get 25% off, it is a one-time payment to join the signals room. And you might say, oh my gosh, signals, what is wrong with you? You sell signals. Yes. However, I'm a big advocate for signal services that are backed by results. If you want to learn something, there's no better way to learn than to see the journals of people who actually trade and put real money on the line in front of you. I am logged in right now to my trading account. I trade real funds every single day, and I get ad blocked every single day on the live stream. So my point was saying that is that if you're going to consider learning from someone, do yourself a huge favor. Never learn from people, watch people, send money to people who don't prove that they actually trade. And so when I tout that I do that, it is simply to let you know you're not wasting your time if you decide to get a membership with us and come learn something. Because again, learning something from people who don't share their actual trades, what are you doing? You've got to, if you want to be a professional business owner someday, if you want to start a successful business, would you learn how to do that from somebody who's never started a business? No. You'd learn from somebody who has a proven track record of doing it successfully. And I'm not saying that just to like pat myself on the back. I understand like, oh, Nick, yes, you are. But I'm telling you that I'm imploring you, whether it's me or someone else that you would like to learn from or to work with, don't send anyone money who does not show you their trading account. It is that simple. That's my hard take on it. So with that said, oil trades running. Qs are probably coming down here this morning. Or they are coming down this morning. So we're giving back a little bit of this. We're sitting up at resistance on the NASDAQ. So for those of you guys also watching the NAS, this is what I'm looking at. You've got price coming up and tapping into this resistance point. This is not the all-time high, but it's pretty close. We got all-time highs up a little ways further. I think we're going to go back and test those before the end of the year. I do think that we probably see a little bit of pullback here this morning, but this doesn't, and maybe I'm wrong. Maybe we see a big slide, but I've got my stop loss in place. My risk was bigger than this. I trimmed my risk on this trade down to just this swing low at support. So if price comes all the way down, that would stink, but I would still take a pretty controlled loss. What I'm looking for is a possible break and continuation. If we get any higher lows here, stop loss is going to get trailed into profit further, which would be great. So I'm watching today NASDAQ. I'm watching my oil position to potentially look for trailing stop opportunities there. I'm looking for gold rallies for possible sells. I've got a lot of stuff that I'm watching. If you'd like to see those exact trades that I'm taking, full breakdowns, full explanations, full analysis, if you would like to get those sent to your phone or to your desktop with full breakdowns, join our group. It is currently 25% off while we are streaming. So just click this message. You'll be connected with someone on our Discord support team. They'll get you 25% off. Just let them know that you're watching the stream and they'll hook you up. Okay? Okay, so again, with NASDAQ, keeping this really simple, I think that there's two things that matter the most. I've said this many times on my channel, so if you've heard me say this 74,000 and a half times, then let's do the 74,001th official time since we're on halves right now. All right, so is growth in the United States still attractive? The answer is yes. You want me to prove it? Well, I'll show you some of the metrics that I look at in just a second, but let's come back to that. The second question is, okay, inflation came in higher than expected today. Does that derail the whole story for interest rates? And what I mean by that, let me ask you to think about this. Think about this for a second. Are interest rates in the United States still likely to come down? Because all we need is the rumor for markets to potentially go up. Is the Fed still going to cut rates? Is the next move going to be a cut from the Fed, or is it going to be prolonged holding or even a hike? Well, I think the next move is still an interest rate cut. We're pretty close to 2% inflation. We're still feeling pretty restrictive in terms of what the Fed's policies are. So I think they're going to cut rates. They're going to keep cutting rates. Growth looks pretty good. So these two things give me, until further notice, the check mark on U.S. equities. It doesn't mean that they can't get overbought. It doesn't mean that at some point it won't crash. It will crash at some point. Markets always crash at some point if you wait long enough. I just think probabilities-wise, that's not right now. Right now, there's some solid evidence for markets to just kind of do their thing and chug along. I'm talking specifically about the stock market. For gold, for silver, for oil, each one of these have their unique specialties that we go through on this show every day. Okay? So right now, pullbacks, in my view, are opportunities to potentially trail stops, add to winning positions, etc. So for me right now, I'm with Jacob. I still think this is a buy the dip moment. Until something really breaks and changes, 2.4 versus 2.3 inflation does not ruin the story for stocks, in my opinion. NASDAQ down 0.5% with just slightly higher inflation than what was expected. So we'll keep an eye on how that plays out here today. But I mentioned I would show some evidence on the growth side. So let's do that. So what's the easiest way to look at growth? You could look at GDP numbers. GDP numbers have been pretty good. They've beaten expectations for the most part recently. GDP is at 3%, right? So 3% growth is not too shabby for an entire economy, right? So we got 3% growth. All right, what else can you show us, Nick? Well, the second easiest way to look at growth in an economy is look at their jobs market. And the jobs market in the United States has been a subject of controversy. Somehow, some way, everything gets turned into politics. People say, oh, no, the numbers are fixed. The numbers are this. Well, if you're really here for the right reasons and you are just here to be a trader, who cares if they're fixed or not? I don't even care. At the end of the day, the market moves based on what it sees here. I don't care if there's going to be revisions later. Maybe there won't be. Maybe they'll be revised higher. I don't know. The point is, we're traders here. We're trying to make money. As traders, we look at this and we say, well, this is what the market is reacting off of. So jobs data being upbeat is why the dollar is up. So who cares if it's fixed or not? I don't care. Like maybe it is, maybe it isn't, but it's irrelevant because the market is moving off of it already. So here's the concept. We have growth in the US. We have inflation overall still cooling, even if today's numbers were not super great for that story. There's still cooling inflation data, and we've got company earnings looking good. So I stay bullish until it's time to bail. When is it time to bail? It's time to bail when support is no longer holding. Like if you start getting these moves, then price has told you. You know, if we put in a lower high on the longer term basis here on like the weekly chart, pull up a weekly really quick. If you put in a lower high here, then yeah, then I can see what you're saying. But assuming that the top is in for a bull market is a really dangerous game to play. So that's where I'm at with the NASDAQ. I'm going to keep playing that on the long side until it's time to abandon that game. But as a trader, again, the cool thing is you have the flexibility to adapt as things change. Russell's coming down by 0.75% here this morning. So a bit of a sell off on the Russell. Dow Jones is just modestly lower, down 0.18. NASDAQ's down 0.5%. S&P's down 0.3. Gold is up 0.5%. Interestingly, again, I don't really see this inflationary number as a super positive thing for gold. If it was a really positive thing for gold, gold probably would have just done this. But we're not quite seeing that. So in my view, actually, a push up into this 2630 level might get met with some pretty heavy resistance, in my opinion. I lean more towards the bearish side of this story. In fact, let me go look at the top setups page here on the Edge Finder. Gold is, gold's score just got worse. Gold is at a -8 sell reading. Mind you, gold got a -5 reading over here. So that put us in bear territory on the Edge Finder's output. Big drop here. And on the pop, we've got a -8 score on the Edge Finder. So I'm going to go ahead and say this pretty clearly. I will probably look for sells in this area if we pop up into that range. Probably a small sell order because this is still in a weekly chart uptrend. So I'm going to be cautious with it. But I do like the risk to reward, looking for possible short setups on gold into this rally here, if you get one. So yeah, that's actually interesting. Gold's getting a -8 reading. The lowest score on the Edge Finder today is gold. With inflation data coming in low here this morning, this score here will actually go I believe -1, which would put us at a -9 score. Yeah, that's interesting. Guys, the Edge Finder is 25% off during the duration of the stream. If you'd like to get access to our fundamental analysis scanning tool, it is, I say completely humbly, modestly, and not bragging whatsoever. It's the best software for fundamental analysis in the trading space right now. It is super hot. We got thousands of traders using it all over the world. We've got a dedicated team to constantly improving this software. It allows you to look at tons of different macroeconomic data points. If you want to incorporate fundamental analysis into your trading, don't mess around. Get 25% off during the duration of this stream by chatting with a member of our support team or heading over to our website, a1trading.com. We build software tools for traders. That is what we do. And check that out. Don't miss out on the 0.25% or quarter off discount that we're doing during CPI. Okay, so guys, we're now going to take a quick break. We're going to be right back in just about 30 seconds or so with Miko and Marco to take a look at some technical setups following this big volatility that we just saw in the CPI report. Stay tuned. We'll be right back. You know, this Edge Finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
All right, guys, and we're back for Technical Thursdays. Miko and Marco, good to have you guys back. Excuse the spooky themed ads. I don't know if you guys like it too, but I love this season. I love, fall time, and I love Halloween and all. Well, actually, yeah, I mean, you guys do Halloween where you're at, right? I don't know how international that holiday is.
It's very international over here.
Yeah. Okay, cool. So welcome back, guys. CPI report just came out. Got some big volatility in every direction here. Stocks lower. Got the dollar index was up, came back down a little bit. Gold's up this morning. Silver's up this morning. Oil's up a little bit. And you got currencies moving as well. A lot of the dollar crosses, although the dollar itself is not making big moves. Kiwi dollar, some of the yen crosses, these things are all moving quite a bit. So we'll let you guys kind of do your chart of the day concept here first. So Miko, in terms of chart of the day, you want to share your screen real quick? We can check out what you're looking at.
So, there's a couple markets I'm looking at. Okay. At the moment, I'm in 2 trades. Well, you say market chart of the day, but I've actually taken this position about a week ago.
Okay.
But yeah, it's taken its time. It's obviously chair for shorts last Tuesday after coming into some nice areas up here. But I'm looking for some downside with this one. Saw some nice momentum early this week, and I'm hoping that CPI can give this one a bit of a kick. And I'm also short on pound yen as well, which this one I've been holding for even longer, for about almost 2 weeks tomorrow. Hasn't been going well. It's been going against me, but my stop loss is still above the high, so I'm still going to wait to see if price is going to hit my stop or come back into profit. But I'm really bearish with the yen pairs. I do think there's a lot of downside for them. A lot of the yen pairs have come up into some nice areas where I do think they can turn around. CAD yen in particular, euro yen as well, dollar yen as well, but I was a bit dodgy because of CPI. New Zealand yen struggling at this high here as well. So I'm really bearish with these yen pairs. I'm in pound yen, hasn't moved well, but we'll look to see if that can change around. But yeah, those are the 2 markets I'm looking at.
Okay. Yeah, fair enough. Those yen pairs, of course, have been super volatile recently. Dollar yen's had a big move up here recently, but as you just showed on your chart, kind of hitting up against a level of resistance. We'll see if that holds. Same question to you, Marco. Top chart that you're looking at today.
Yeah, sure. So for me, my eyes are on the euro pairs. I don't like this candle right now. Maybe in the next 10 minutes, we can get this candle to pick a direction. So I wanted to either clean close on the top or clean close on the bottom, meaning leave no wick. Currently, it's leaving a large wick up and a large wick down, which is the absolute worst scenario for me. So let's see how this candle closes. I would prefer for this to close bullish because I'm seeing a very high probability pattern in the price action, where the price is just breaking these lows, and each time it breaks them, it is struggling, meaning it's building momentum to the upside. So it's still pretty volatile. Still, we're going to see. EJ, my bias is for this thing to go down. We are breaking these major highs. Each time we break, we retrace, and we're forming a high probability ascending channel right here, which is a bearish pattern. So I am expecting this bearish momentum to continue. I had no opportunity to get in here, but if this can go down a bit more, I will definitely be looking for sell setups. So those are my 2 main pairs. For the rest of the pairs, Aussie US dollar, actually it's not looking that bad. It's printing a bullish candle right now, so if it can print a bit more bullish momentum, I would be interested for buy setups. AJ is gonna be pretty corrective for me right here. I'm gonna be more patient. Pound is also printing that clean descending channel, which is a bullish pattern for me personally. So if we can get the signature, if we can get the bullish momentum, I will be looking for buy setups. Until that happens, I will be more patient. And NJ is going to be pretty corrective and flat in this area. And also, I wanted to ask you, so I started forward testing with the Edge Finder, and it's really interesting piece of software. I have seen a couple of times where my technicals align with the fundamentals, and then it's an even better trade. So I'm doing some forward testing to see how I can implement it. But I wanted to ask, so do you manually input any of the data, or is everything automatic being picked up from a server?
So we have that's actually funny, Marco. We have like an internal joke within our office. We've had somebody, you can imagine that, as a software team, we get a lot of most 95% of people are very lovely and very happy. And then you get some people who are not happy and they always complain about stuff. Like that's going to happen with every business. But we had somebody who accused us once of none of this actually being automated, all of it being manually inputted. And I just thought that was the funniest thing in the world, because if we were to manually input all of this stuff every day, my full-time 24/7 job would just be sitting here crunching numbers and adding it to the Edge Finder, which no. So it is all automated. There is nothing manually inputted on the Edge Finder, which would be the most painful thing ever. So no, it's all manual.
Yeah, I thought because of the commitment of traders is a big document. So I thought at least you maybe need to do that manually, but if you found a way to automate it, that's great.
Yeah, and also for you, Marco, and for anybody else who would like to read up, you might have already seen this, but if you go over to our website, a1trading.com, we spent so much time on this, just doing write-ups on every different feature within the Edge Finder, how the scoring works, how the Edge Finder functions with it. But this is a pretty cool, it's basically our free course on the Edge Finder. If you want to learn our methodologies and what's behind it. For listeners, you can go over to a1trading.com/edgefinder-tour. I just dropped the link in the chat if you want to check it out. Thank you, Marco, for the plug for the Edge Finder today. That is absolutely awesome. But
yeah, no worries. It's cool because I have some trades where I'm not sure if they are high probability or valid, and then I tend to stay out. But if I can get the extra confirmation from the Edge Finder, from the fundamentals, and I actually get in, it's going to be a pretty good trade. That's at least what I found.
Well, when we designed it, and I promise to everyone listening, this was not like an intended. This is not a sales thing right now. But when we built it, we really did intend for it to be. This is not Trader Nick's methodology only software. This is meant to be sort of a more universal tool that traders who have their own styles, ways of trading, markets they watch. The Edge Finder is not built around me or my style. It's built around just generally market scanning, stuff. Everybody, inflation numbers like we just saw, CPI is going to impact charts quite a bit. So I think that where we fill a gap in the market as a team is fundamentals are like this way up here, hard to understand thing. The fundamentals trying to bridge that gap a little bit and just make it easy. So that is, why we do what we do. But thank you for the testimonial here in front of 1,300 people. To everybody, you heard it here first. Get the Edge Finder. Marco stamps it with his approval. So
yeah, it's pretty cool.
Yeah. Anyways, let's keep going. Miko, gold has been interesting. Gold's been in this monster uptrend this year. I'm kicking myself because I wish I just stuck my whole account into gold and never touched it this year. I would have had a much better trading year. I didn't have a bad trading year, but I would have had an incredible one if I just stayed long gold the whole year. But of course, I'm kidding because hindsight is 2020. But I wanted to ask your thoughts on this. Is gold in the process of topping out, or is this just a pullback before the trend continues? I'm curious your thoughts on gold or silver, as I know you watch those markets.
So yeah, I'm pretty bullish still with with gold. I think with gold we've seen a lot of momentum in the past few months, but certainly in the past few days, few weeks. So I think naturally gold is just going through a bit of a retracement, a bit bigger of a retracement. So I'm still very bullish, and I'm looking for opportunities to take price higher. Areas I'm looking at is around 25.80. And also 25.60. So this low here. Yep. So if gold was to get there, start to see some evidence of wicks bouncing, I'll be looking for some entries. And my thought process is I'm expecting gold to keep pushing high until I see some clear signs otherwise. So sustained moves down, big bearish momentum, consistent lower lows and lower highs. That's kind of what I'll be on the lookout for with gold, because although things are already bullish, at some point we will see a bigger correction, and we'll go through maybe a consolidation or a big pullback at some stage. So that will happen. But for now, I'm still very much in the expectation that gold's going to keep pushing. So yeah, I'd watch out. I think intraday, probably this area here might be a bit of an obstacle. Maybe it might send price down and give us the opportunity to get long. But from a bullish standpoint, 25.80, 25.60 is kind of where my interest is.
I like that. And I kind of actually agree with you on the Long term, it's a bullish trend. It's hard to fight it. I mean, this year has been a monster year for gold bulls, and I've been bullish pretty much all year until recently. I actually sort of flipped some of the more, fundamentals without going into that too much. Basically, have shown me like, okay, the dollar's looking kind of strong here. We may see some dollar strength in the short run, and I do mean short run because I don't think gold is going to be. I don't think gold's going flying back down to 2,000 an ounce or anything. I'm just kind of saying we've had a really strong run. We've seen some signals on the 4-hour chart that I see that have, some of that momentum has lost. We've rolled over, and I don't think it's out of the question that we could see a bit of a retracement move, maybe down to, as you just mentioned, that 25.60 level of support. And then I think you get cautious if you're bearish, because now you're coming into a year for the bulls. So could this thing have a bigger retracement? Yes, and as you pointed out, it certainly will at some point or another. The question is, will it be sooner or later? But I do kind of think that gold has some room to test this level, maybe go test some key levels of support since we've been teetering up here at the top. But we'll see. Marco, same question to you. Are you watching gold? What do you think about all this move recently?
Yeah, let me take a look. So on the 1-hour chart, pretty corrective. It kind of looks like Bitcoin on the daily chart, doesn't it? Like in a big descending channel.
It does.
Pretty corrective. So I couldn't really pick a bias right here. I think it's just going to follow that structure for a while until we get a breakout of one of the trend lines. But if I put it up to the daily, let me take a look. The daily seems to be just a bit of a pullback. Yes, we're getting some selling pressure. Right here, for me, this would be kind of a flag formation where I would actually be looking for buy setups, to be honest. So I'm still not convinced that this is going to go down. I think the pressure is still up, especially if you look at these legs of momentum, pretty nice, pretty strong. So I would say this can very easily go to the upside and continue going up, at least on the technicals on the daily chart. For me to go bearish, I would need to see like a big, fat red candle that is much bigger than these blue ones. That would be a big confirmation of a bearish market.
I think if you're going to get like a real shift in momentum for gold, you really start questioning, okay, you need to start seeing some serious lower highs, lower lows on the daily chart. And I do think, I'm talking about potentially trying to get fancy with some short-term bearishness, but I'm also well aware that you're talking about trying to short in a very strong uptrend that has just been so dominant this year, and almost all money on the short side this year has been just thrown away money. So doesn't mean that it can't change, doesn't mean that we can't look for clues that maybe it will, reverse at a time. But anytime I take something that I know is pretty contrarian on a price action standpoint, my sizing goes way down. So I just take a smaller position. If I like it enough, I might still take trade. So I'm talking about possibly trying a short position here, but it's going to be small size. And if it rallies, I got to just get out of the way because it's one of those things. So next one I want to ask you guys about is the indices. The S&P 500 yet again has broken through the uptrend. Yesterday we had a long conversation on the stream, myself and Chris Pulver, who's a regular stream guest as well as you guys. We just talked about how, this is just the importance of recognizing a momentum and moving market. It doesn't matter if it's the indices or gold or whatever, but if you're just looking at a chart like this and it's just trending one way, it's just a real hard thing to fight. We just got done talking about that with gold. Indices are sort of the same story. You've got this uptrending market, this thing that just seems to not want to quit. What are you guys' thoughts? We'll go Miko first on NAS, S&P, Dow, whatever you want to look at.
So yeah, it does look like the strength is back alive again with the indices, because we were consolidating for a few days there, but a really strong close at yesterday's candle. Same with US 30 as well, not quite to the highs. I do like NAS though, because with US 30 and S&P, these kind of like a fresh highs there, all-time highs, whereas with NAS, we're not quite there yet. So I expect this one to follow along and catch up with US 30 and S&P. So if I was looking to get involved in the position, I'll be looking for opportunities to buy NAS. It would either be on the retest of the high here or the retest of the low here. Or if I'm looking a bit more intraday, I might be looking at the retest of the high here if we can get a nice break and retest there. But either way, I would be looking at buys because I would expect us to get to the high of that 2,700 sooner or later. It's just about kind of find the entry for it and ride that up. So yeah, very bullish on the indices in general, and probably going to see more upside. But I think NAS is the one with some really nice potential.
I actually like that a lot too, Miko. The NAS is the one that I'm personally looking at the most closely right now for a lot of the same reasons. Both on the technical side, I like that we have room to go back to get to the highs. We've got some from where we currently trade. That's about a 2.5% move up, which could leave you with some good opportunities if we do see the trend kind of chug along. Yeah, real good stuff. Marco, same thing. Any of the indices, S&P, NAS, US 30, whatever you want to look at. What do you think?
Yeah, let's cover the S&P.
Okay.
So on this 1 hour chart, we're getting a definite uptrend on this last couple of days. So it looks pretty good, looks pretty bullish. Now breaking the structure a little bit, but that is just how the S&P moves. So it's not that unusual. So bullish on the 1 hour. The daily is going to be very bullish as well. I mean, just no sign of stopping this train. We're also getting these bullish patterns, V reversals. So I just don't see this thing slowing down anytime soon. Yes, it's not as impulsive as it was right here in these legs, but it's still just trucking to the upside. We had this bit of a correction when everyone got super scared, but then we recovered even more quickly than we went down, which is pretty interesting to see. So I think this is going to continue going up. At least that is the probabilities, what the probabilities are telling me. And I just don't see any signs of stopping. I'm not seeing any big bearish pressure, any breaks of structure on this daily chart.
We had a long conversation yesterday that I referenced once before, but I want to come back and get you guys' thoughts on it too. It can be frustrating. I know firsthand, you guys might have felt this FOMO as well. I felt so much FOMO back in the day with Bitcoin when it was going crazy. And I was like, man, this thing could have paid for a freaking mortgage if you were in this thing for the right, period of time. But FOMO is a real thing. And it's one of those things too, when you get charts that look like this, it's easy to then be like, well, then they look like this later on. But it's actually, if you go bar by bar, and you see something like this, if you just stayed with that momentum, most of the time, especially if you're an active trader and you're willing to bail on a change in that, it's like most of the time you made money if you stayed long. And when Bitcoin was falling apart, if you were staying short, you made money. It's almost like this momentum thing is almost so simple and a little bit frustrating at the same time, right? Because this momentum concept, when you get into this bull territory, it's a little bit frustrating if you're not in it, because you're like, this thing just goes every single day and I'm not in it. And you just have these thoughts of frustration with it. But it's almost like when you have that momentum happening, just wait for your chance, be in the move, and don't overthink it. And I think the same thing goes for gold. Same thing goes for stocks. Same thing goes for sometimes in yen crosses. When you start getting these ridiculous, never ending moves, as crazy as it may seem, sometimes for me in my trading, those are the moves that make me the most money. The moves where it just seems like it just grinds every single day higher and higher and higher. I find a corrective pullback, I'm in it, and then it just grinds and grinds and grinds. And then eventually it changes. But just riding that momentum, I know all three of us incorporate momentum pretty heavily into what we do. So Miko, what are your thoughts on that? Momentum and that concept of well, I don't want to be the last one to buy or the last one to sell. How do you kind of just get over that? You just say, look, this is what we do. We buy high, we sell higher. We're not trying to always just wait for buy low, sell high, which sounds good in theory, but it's quite difficult.
Yeah, I think really the key to it is know what you're trading, because as you mentioned with indices and Bitcoin, it can be very, very effective to do that. But sometimes in FX, it'll have its moments like with the yen pairs. But for example, CAD CHF, which is a very choppy pair, it might not work as well, and conditions will change. I think is looking back over charts and history and see what happens. Does the market tend to continue going higher? And that can give you confidence that when the next pullback happens, you're looking to try and continue that trend, because what happens in the past is a good chance of happening again, unless anything crazy does happen. So in terms of buying high and selling high, you need to make sure you're in the right condition for it. The market is trending, and you understand that probability is on your side. So you're willing to hold that position, and you keep your loss small as well. And the risk reward is very favorable. So when it does work out, it can be very, very rewarding as well. So I think it's definitely something to really focus on in the right conditions. But of course, if the market is just consolidating, then not the best thing to do. So I would say focus on the conditions that can be really beneficial.
Yeah, no, that's so true. And you mentioned, when you're looking at like indices, crypto, et cetera, those things are some of the more obvious examples. But even in the currency world, if we take a look, at dollar yen, right? The last few years, this has been a trend. And even if you're not a fundamentalist, even if you just look at the technical chart, pull up a weekly chart, and you say, is there right now a very persistent long-term trend? And the answer for a long time is and has been yes. It's been just drifting higher, and these things are kind of rare. I mean, there's also the obvious one, which is not a real thing, but the Turkish lira has just been a perpetual uptrend because of course their currency's falling apart. But my point is, when you can observe just these huge secular trends that just are kind of nonstop, you can play all day long trying to call when that's going to end. But the easiest thing just seems to be wait patiently, ride it, and then bail on it when it no longer is a thing. So I don't know. Marco, same question. Momentum, finding it, spotting it, and just kind of going with it. How do you approach that concept?
Yeah, I mean, what you showed, you could just use the weekly chart and plaster on, I don't know, the 200 EMA. Be a buyer when it's above, be a seller when it's below, or just sell a per position when it crosses the 200 EMA. So that's a pretty easy strategy. One of the big problems with the new traders is they tend to overcomplicate things. They tend to not trust the simple things. So if you tell them, like, look, just be a buyer above the 200 EMA, sell when it crosses down, they're going to think, no, that is too simple. It doesn't work. I need to overcomplicate. I need to plaster on 20 more indicators. And they just never can believe in the simplicity of trading. And I think the most simple strategies work the best. But again, you get these slow periods, the drawdown periods, you get bored, you want to overcomplicate, you want to add in new things, and it's a big game of psychology in the end. But if you can keep it simple and believe that simplicity works, well, then you're going to be very profitable.
Yeah, and I would add something to that too. Marco, is like, simplicity works. It's just that people don't want something that works. They want something that's magical. That's where I think people fail with it is, okay, you put a 200-day moving average on something, you look for corrective pullbacks, you look for whatever you look for. For me, it would be, look for a fundamental guidelines and then look for technical pullback, whatever your system is. Keep it relatively simple, but people don't want simple because even simple has its flaws. Like every strategy has flaws. What naive and new traders struggle with is they don't want anything with any flaws, and that's just not realistic. So it's almost like, if you lower your standards a little bit for what good trading looks like, things start to unlock for you. And I think we probably all agree on that, but it's really, really important. It's just like, lower your standards a little bit, take some pressure off your own shoulders. You don't need to be making 50% per month. Just make a slow, steady amount of money, and over time it will grow and grow and grow. So I guess if you have anything else to add to it, feel free. Otherwise, we can move on to maybe Bitcoin.
Yeah, just realistic expectations, as you said. That's the most important thing. Being surrounded with traders that show you the realistic expectations, because 99% of people show you the 30% per month every month. And that's just not possible. So once you come to terms with the realistic expectations, then you're going to have a much easier time of actually trading in the live markets as well. So yeah,
it was one of the best moments of my trading career was when I gave myself permission to stop trying to chase the Holy Grail, just make slow and steady money. It unlocked everything for me. I was like, oh, wait, this is not impossible. Trading feels impossible when you set yourself standards of being like, I want to make $1 bazillion quick, retire my mom next month. Like, yeah, of course it's going to be incredibly painful, stressful, and hard. Like you're setting yourself to be a god tier trader in a market that's just not that predictable. You can build systems, but nothing is perfect. So anyways, we got to do our last chart here. Bitcoin still stuck in this range. I'm hopeful. I've said this last week and the week before that, and then the week before that, and the week before that, that I'm wanting this thing to break out. I want this thing to make a move to the upside, personally, I'd like to see that happen because I think that would be, equities being higher, Bitcoin higher, Fed cutting rates. I'd like to see the sort of soft landing situation where things are good in the world, and that's where Bitcoin can, really run hot. Anything you guys are seeing on Bitcoin? Miko, you can go first. Are you looking at Bitcoin at all?
Yeah, I mean, with Bitcoin, it's been more of the same in terms of just kind of bouncing up and down in that channel. My thinking with Bitcoin is that I'm expecting price to remain in that channel until it doesn't really. So as long as we keep bouncing, we push back to the high end of the channel, back to the low, I do expect us to reverse at those points. If we do get the breakout, and then I'll start discussing some long opportunities, some breaking retest of the high. If we can buy above that, that'll be fantastic. Or buy in the retest of that, that'll be great as well. Because if Bitcoin does go for that next breakout and see that momentum, we could be seeing moves like this. So we could really let fly and then try and ride some pullbacks afterwards. But because we've been struggling so much at the top end of that channel, I think we'll probably just eventually come back to the 50K mark as well, and then maybe bounce back up again. So my thinking is that I'm expecting price to remain in the range, and if we come up high, looking to sell. If we're coming down low, looking to buy. And if we do get that breakout, then I'll start discussing some retracements and some pullbacks and looking to ride that momentum. But yeah, I'll believe it when I see it with Bitcoin, because it's been in that range for a while. So I'm waiting for that.
Yeah, I think that's a good way of putting it. Wait for it to prove itself, really. Same thing, Marco, Bitcoin, Ethereum, any crypto that you're looking at?
Yeah, so on the daily chart, Ethereum is very bearish, so I would much rather focus on Bitcoin. Bitcoin is just in no man's land right here, but it's looking a bit better than Ethereum. Again, we have that channel, so until there is a breakout, there is really no bias for me personally. Not looking the best. As we know, Bitcoin does rely on a lot of hype, a lot of activity on social media, which is currently non-existent, I would say. So maybe once we break out of a key level, we can get some activity on social media and possibly a bullish scenario. But for now, I do believe we're just going to continue being stuck in this formation right here. So yeah, not a good story. It's a pretty quiet instrument right now.
Yeah, no, I agree. It's one we keep an eye on just for fun here on this show, just because it has this tendency to go dormant, really quiet, and then suddenly one day it's awake like a dragon. So we'll of course keep watching it. Miko, Marco, I want to thank both you guys for coming on the show. Before we let you head out, let's do something real quick. Yep, we got the links here in the chat. Everyone in this audience, we got 1,240 people watching the stream right now. Do me and the team here a huge favor. If you guys could go subscribe to Miko. Thank you, Insurance Casinos, for subbing to Marco.
Yeah, thank you.
Yeah, Casinos watching you, man. That's awesome.
Thank you.
Yeah, if you guys could make sure to go subscribe to Miko and Marco on their YouTube channels. We've dropped the links here in the chat for your convenience. Click those links. Go support these guys. It's Marco's Trading Journey and Miko Audu. You can find him on YouTube, on social media, on Twitter. It's Marco's Journey. It's Marco's Journey, I think, right?
Yep.
You guys can find him on socials. Do us a big favor. Go follow him. Go support him as a thank you for coming on the show and helping us out today. Guys, thank you very much for coming on today.
Thank you.
See you next week.
See
Goodbye.
ya. All right, guys, and we are going to push on here to our next guest taking over the show. We got Forex James, heavily requested. I saw a couple people already asking, "Hey, when's James coming on?" So we are we're building a cult following for Forex James here. I don't blame you guys. He's got some of the cleanest charts that I've seen. I saw his camera went down for just a second, so maybe we'll whenever I see him back, we'll let him come on. I'll just check on some charts here for a second until I see that. We've got NASDAQ making a push here to the downside this morning. It's the trade I'm in. Oil also making a good move here overall, but reversing a little bit. Gold tried to come up to my level. I'm still watching this one. I may take a trade if that sets up. I may not. We'll see. If I take that trade, it'll get shared in Discord. Remember, we're doing 25% off during the duration of the stream. If you'd like to get 25% off our Signal service, it is quite the opportunity with that 25% off discount during this stream only. If you'd like to take advantage of that discount, we'll drop the link here. Boom, live stream offer is live until the end of the stream. Makes sense. It's the live stream offer. With that said, guys, we're going to take a quick break, and then Forex James taking over the show. Stay tuned.
Gentlemen, how are we today? I think someone turned off the lights here, but it's whatever. So you're here for a job interview, Mr. Nicola and Vlad.
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh yes, hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
Okay, there we go. I just realized mic wasn't on. Sorry about that, guys. I was just saying the reason I was late. So I posted this picture this morning on Twitter, basically say, it's how I'm going to look after CPI. And it's not far off. I was nearly just sick. So I placed a short position on gold when I was backstage waiting for the stream. And instead of putting on 0.2 lots, I put on 12 lots. So that would have been detrimental. So I had to unplug my phone and close it because my MetaTrader froze. It was one of those moments where I was like, oh my God, is all my money gone? But yeah, all good. So anyway, just took a short on gold. Basically, simple setup. We've got the level of structure here. We've broken below, retesting, met this 0.5 level. Also seems to be holding below this 200 moving average. We've also got gold as the most bearish reading on the Edge Finder. So yeah, gold shorts look pretty good at the moment. This is only on the H1, so we'll see how it develops because obviously the higher time frame you could still argue is very bullish. But yeah, we'll see. It's a little bit of a testy one. Still in my US dollar NOK short positions. These are, again, this is a position trade as I explained yesterday. So you'll probably see me talk about this one quite a lot over the coming months, if I'm still around in a few months. So yeah, we'll see how this goes. New Zealand US dollar. I saw someone in the chat talking about this one. I'm still short. I actually placed a new entry on this one. I think it was last night or this morning. So I'm still very bearish on New Zealand US dollar. Obviously, we had pretty weak CPI or news today, really, for the dollar, obviously pushing this market up. But I don't expect it to be too aggressive, really. I think this trend will continue. I've got my stops just above these moving averages here. And I'm basically going to keep scaling short positions into this market because it's essentially no-brainer. I can explain why. I'll go over some fundamentals for this one later. I'm also in oil. I saw Nick was in a very similar position. It might actually be the same, almost the same maybe. So yeah, long on oil. This is a little bit of a gamble. Well, I use the word gamble lightly. Sorry, just give me a second. Having some technical difficulties today. My monitor's just turned off. It's all right. I assume you can still see this one though. So yeah, still long on oil. The reason it's a little bit rocky is because this oil position relies heavily on geopolitical situations with the Middle East rather than great fundamentals. It's actually on the Edge Finder. If I can find my browser, there we go. So it's on Edge Finder here. We've got a bullish reading, so that's also a nice factor that we've got. James, have you been bulking? No, I'm just fat. So yeah, bullish reading on Edge Finder. We've also again got supply concerns with the Middle East. So this one is kind of there, but you know, I was really short on oil not too long ago, so that's why I'm a little bit on the sidelines on will it work, will it not work. Also still short on the US dollar Mexican peso, but you know, this one looks probably going to get stopped out within the next hour, I would assume. Short gold? Yes, short gold. No, I may not be fat, but I've definitely, you know, gained weight. So I used to live in a big city with gyms, and I had friends I'd go on runs with and rock climb and all sorts of stuff, very active. And now I live in the middle of nowhere, so there's nothing to do other than trade and eat and sleep. Hi, James. What's your opinion about the DXY? Yeah, let's have a look at the dollar. So I've got it all nicely annotated for you guys to see here. So we had inflation, obviously CPI. We also had jobless claims. Now, jobless claims seems to have been pretty, well, not muted, but it's not like the biggest factor of today. CPI was obviously in the main scope or the main focus of people. So what we had was inflation 2.4. So it came under previous, but didn't quite meet targets, which, yeah, not great, not bad. Jobless claims is quite concerning for the labor market. So jobless claims came out at 258K, which is above previous and above expectations. So again, really not that good. So I still remain on the seat of a 25 basis point cut. I don't think we're going to get 50 again. I just don't see that as a realistic thing. I just don't see how that would benefit. Being super aggressive, 100 basis points, you know, not great. Hey, what do you think about euro yen? So I'm actually looking to go long on some of the euro pairs. I'm just not sure which one. It's probably going to be pound yen, but I've not fully planned that position yet. So with the euro, I think the downwards trajectory that we're on is going to continue. I just don't see any redeemable factors for the yen at the moment. Actually, let's pull up some of the data for the yen. Give me a second. Let's have a look here. So their GDP is what we want to see. So if we have a look at the yen, it's not great. So we've seen forecast of 0.8 came out at 0.7, so we've had a decrease. We did have one pop, but again, back to slip into the downside with GDP. We've still got no rate hikes coming from the Bank of Japan. So yeah, overall, there's just nothing really redeemable for the yen. So I'm expecting all of the other G10 currencies. So we've got the yen, the pound, the euro, the dollar, all to outperform over the longer term. It's just more a case of how do you navigate through all of this noise. Trying to get in and out during this period is very difficult. So what I'm really looking for, all of the yen pairs look very, very similar. They've all created this resistance level. So really, I'm looking for a very clear break, a retest, and a continuation. So once we get that retest, I'll start entering and start positioning more for a buy position. But yeah, at the moment, it's a bit too early. Bashi got 30R today. That's great. Pound dollar in the near term 1 week. All my money is in GBP. Yeah, so when you say your money's in the pound, do you mean buying or selling? I'd assume you mean buying it, but yeah, I mean, I'm just having to think. Pound dollar isn't something I'm overly interested in. Technically, it looks quite good to go long. The problem is we've got both of the central banks cutting their rates. And it's just, there's not a clear divergence. There's no clear factors here for me to be saying, okay, pound dollar is bullish, it's bearish. There isn't anything there. Whereas with euro dollar to the short side looks really good. So we've got the Eurozone economic weakness that seems to be quite persistent. We've got the European Central Bank that is going to be cutting rates more aggressively, it seems, than the Fed. We've got, obviously, the Fed cutting rates as well, but it shouldn't be, again, as aggressive as the ECB. And we do still have supportive factors for the dollar, whereas the euro doesn't seem to have very much at all. So what we can see on the daily is we've rejected this 200 daily moving average almost perfectly. In fact, I think it was perfectly. However, we're now stuck because if we are bouncing to the upside on the daily, we've just rejected to the downside on the weekly, then what can we do? Well, we're going to have to really try and catch some sort of pullback here. So I think somewhere around here would be the ideal spot. So if we go short on the 50% level, possibly a stop at the previous high, I'm quite pessimistic on the euro dollar. So really, if you were looking to be in a longer term position, I wouldn't mind targeting the low sort of down in this area. And obviously, you more than likely will need to hold this into the end of the year or even Q1 next year. But that's my overall projection or expectation. Oh, you're just holding cash. Yeah, all my money's in the pound. Actually, that's a lie, kind of. All my money's in the S&P and trading. But realistically, I live in the UK, so, no matter what I do, if I withdraw it all, it's just in the pound anyway. So we're in the same boat. Gold, buy or sell? Celebrity, I want you to tell me if it's a buy or sell, please. Please give me signal, sir. Isn't EU hovering above monthly fib right now? That's a good question. Let's have a look. I don't really check the monthly too much, actually, which is probably a bit of a poor habit. I assume you mean here. And you know what? You are right. So another factor, there you go. Really nice monthly level. So you could potentially rely on that as well for a factor there. You said you were bearish euro dollar yen for Q4 and looking towards shorting it back to 141. Now you're bullish, buying it back. Both are swing trades on the same time frame. Why are you shifting? Because the data's changed. So, it's completely fine to have an idea, for example, through Q3, where we had the yen rocked into the upside, we had the dollar pouring to the downside, and the dollar data. So if we look here, we had inflation at 2.9. We had NFP coming out as a shock. We had relatively high unemployment. We had the market pricing a 50 basis point cut, along with obviously the cooling labor market. So during this period, I was very bearish on the dollar, and the yen again was steaming to the upside. So during that time, yes, I was bullish. However, things have changed. You got to stay adaptive to the data. If you don't stay adaptive, you'll lose money. What's the scenario for gold? Everyone seems to be interested in gold. So let's see. So I placed a short position just as I came on, actually. That seems to be hanging around break even. You know what's funny, actually? I made quite a decent amount of money with that accidental position. When I say decent amount, it was like 0.25%, but 0.75% for a mistake. So, all right, maybe I'll start gambling CPI a little bit more. Sato, I'm sorry if I mispronounced your name. Good to hear. I appreciate the kind words. I think silver and gold will be bearish. Yes, I agree. I think in an ideal world, I can't predict this, unfortunately, but I really expect some profit taking on gold. I mean, look at this run, really. So we're now in Q4. We're starting to end the year. So that's one factor we've got. The for profit taking on gold. We get position closing for the year end. So maybe not now, maybe in sort of the second half. So towards November, December time, we might start seeing proper profit taking. But we also have the US data that's starting to look a little bit more healthy. So Fed rate cuts aren't really a huge, I mean, obviously still a big deal, but when we were pricing the 50 basis point cut, a lot of people were flocking to gold. Whereas if now we are sort of ditching another 50 idea and looking more towards 25, again, that might be less appealing to gold, more appealing to start buying the dollar. So there's a few factors to look for, maybe a slightly lower price on gold in the short term. Same, I'm from the UK, sold shares, etc. And then GBP plummeted by 3%. And I want to buy some shares, but all overpriced. Yeah, I don't actively trade anything apart from currencies and commodities. The only stocks I'm exposed to is a ISA account with the S&P and obviously a retirement account as well. So every month I just deposit money, don't check it, don't care. I'll just deposit. I think this year I'm up quite nicely. Actually, it worked out very well. Today I gamble CPI. I'm currently down 2%. Good. You deserve to be down 2%. Hopefully it hurts and teaches you a lesson. Thoughts on Australian dollar Canadian? Let's have a look. You know what? Actually, this might be quite a good market to look at, depending on what oil does. So I'm pretty bearish on the Australian dollar at the moment. Again, we've got falling commodity prices, primarily with copper. Well, actually all of them, but I've been using copper quite a lot recently. So copper's been falling. Australian dollar, well, the Australian economy relies heavily on commodity prices. They also rely heavily on China. So once we had the Chinese stimulus, that helped a great deal. But that's kind of fading now. It's not super relevant. You know, have you seen the Chinese stock market? Not doing too great. So overall, really leaning on the bearish side of the Australian dollar. But then if we can see oil prices start to head to the upside, that would also be very positive for the Canadian dollar. So if we can really start seeing a momentum shift, and again, see the oil prices start to come back to the upside, this may be a good market to go short. The problem is that I see really is the weekly is bullish. So we're above the 200 moving average. The daily, similar situation. We've actually just bounced off the 200 moving average. So it's a little bit tricky to really try and pinpoint an entry. It'd be more a case of just waiting for a catalyst and then come back and revisit. Get me out of here. Traders talking like gambling CPI. I stayed out of Forex today, going to wait for tonight. Stefan, that's the best choice you could have made. Well done. It's actually really hard to stay disciplined during news releases. You know, you'll see sometimes where you've been looking at a trade and it looks great and setup looks perfect. And then, you know, news comes and it worked out exactly as you thought it would or would have done otherwise. And it's those moments where you're like, maybe I should just start trading news. But trust me, be patient, don't do it. Natch, I'm in several positions. Yes, I'm in, let's see, I'm in the dollar NOK, New Zealand dollar, oil, gold, and the dollar Mexican peso is about to get stopped out. Thoughts on NAS? That's a good question. Let's have a look at NAS. Do we have a reading on here for NAS? No, we don't. Oh, yeah, we do. Bullish here. So if Edgefinder's bullish and I only ever buy the indices, then it's actually not a bad sign. I actually don't mind it where price is. Maybe I would go in. Actually, let me check my day trading chart here. Oh, I'm glad you pointed this out. It looks really good. So we've just bounced off the 50 moving average here. We are also rejecting today's daily pivot points. We are clearly in an uptrend. Let's see, is this? Oh, it's also a fib pullback. So there we go. You might get a free signal from me today. maybe it depends. Actually, I'm not sure how long I'm on for today, but if we can get a bullish hourly close here, I'll probably take it, depending on the exact sort of candle there. But yeah, I think, you know, well, actually, it doesn't really matter what I think about the indices. They only go up, essentially. Obviously, they do have down periods where they have corrections and obviously economic problems. But generally, if you look on sort of the weekly charts, they just have a positive drift. So buying them already puts you at an advantage. EuroCAD, please. I've been on a run since 1489.12. Okay, let's have a look. EuroCAD. Oh, well. Actually, I'll go into the H4 here. So your entry is there. Wow, you got a great entry. So I think this trade looks great. I would be quite happy actually targeting the previous highs, so around here. The problem I see is just be very, very aware of what oil's doing. As soon as oil turns around, I have a feeling we're going to see the CAD start pulling its weight a little bit more. It seems to be very weak. If you look at the dollar CAD, euro CAD, pound CAD, they're all basically free money going to the upside. And again, I am very bearish on the euro. So this might be a selling opportunity for me. So if we can come into these highs, I might just rinse and repeat this position I previously took and do this. So I think you're in a great spot. I'm not telling you to close out by any means. Maybe just trail stops or set to take profit. But yeah, I think you're in a great trade there. No need to worry, in my opinion. Stick to your rules or lose money. Something I tell myself every time I open a laptop to trade. That's a great rule, Lee. I love the new Halloween theme. It's amazing. Edwin, is that? Yeah, it is. It's impressive how much effort they put into these streams. Thoughts on New Zealand dollar, US dollar? Yes, I am in short positions. Currently in some drawdown, but it's okay. Oh, actually, it's coming back to my second entry. But yeah, I really want to see slightly higher prices, actually. I'd love to see a further pullback so I could enter again to go short. We've got, yeah, a really nice environment, really, to be selling this market. So you can see my target is not here anymore, which is a bit annoying. Actually, it's here. Let me fix this. Hold on. There, you can see my target's at 0.55. So I'm planning to hold this trade all the way down. So it would be average price would be around there, stop loss here. So I would likely get roughly 2.5% from this trade. I didn't risk 1%. I wanted to see a higher price to add in again. But yeah, at some point I'll scale in, whether it's in profit or maybe some drawdown. Pound yen. Yeah, we can look at pound yen. Okay, so this is yeah, exactly what I was saying yesterday and previously today. So I'd like to see this level of resistance get broken. So really, we go for a break, we go for the retest, and then we continue to the upside. So yeah, ideally we'd have an entry on this resistance, stop somewhere like this, and then depending on the economics at the time, I may even target a full correction of the July move. The problem is there's just nothing down here that's really worth trading at the moment. It's just way too choppy. There's no entries that I can see. So yeah, it's just a waiting game, really. Pound Australian. Yep, we can look at pound Australian. So yeah, I'd really want to be a buyer in this market. Again, going back to the weaker Australian dollar and the relatively Well, actually, you know, I'm starting to change my mind on the pound. It's not doing too hot. But I think compared, you know, if we look at it relatively to the Australian dollar, it still has more strength potential. Yeah, I'll be honest, it's not a market I really want to be involved with. It's kind of just sideways moving. I think I pointed this out previously, but it's kind of just big range. It's a very, very ranging market, really. If you look, you know, range here, range here. It's kind of like we have a really long range, then we'll have a pop to somewhere. So in this case, we had a pop to the downside, we had another range, pop to the upside, range, downside, range, upside. So it's just kind of an ugly market, really. So yeah, unfortunately, I can't give you too much on that one. Will PPI have as much as of an effect considering today's data? Yeah, PPI will. Depends on what the expectations are. Pound Swiss. Yeah, so actually, I wouldn't mind going short pound Swiss. So I think the Swiss has enough steam to keep it going. The problem is it's very overvalued, and the Swiss National Bank is projected to tolerate it in the short term. Now, when the short term is, I don't know. Unfortunately, I can't give you an exact date. But yeah, for now, I think the Swiss is a relatively stable currency to be buying, whereas the pound does have headwinds, and they have recently announced some rate cuts. So maybe a short here wouldn't be too bad, going and targeting sort of the previous low around here, sort of in this area. Wouldn't be bad. Yeah, I don't think that'd be a bad trade. I need to do a bit more research on the Swiss. I don't have too much there at the moment. Actually, let me see. Let's see what the Swiss is doing. The Swiss franc continues to benefit from its safe haven status amid heightened global uncertainty, attracting increased demand during periods of market volatility. Long positions in the Swiss equities, particularly in SMI index, further reflect confidence in the resilience of the Swiss assets. Swiss National Bank has maintained a steady monetary policy stance, which has been instrumental in supporting the Swiss, particularly during times of geopolitical risk. So there you go. Yeah, I think pound Swiss actually can go onto my watch list. I may look to take a trade here at some point. There we go. Is there a possibility oil will sell? Yes, there is. So yeah, my oil position is risk-free in anticipation that we do see sort of a continuation to the downside. So although the immediate trend looks quite bullish, so, you know, we've had higher lows, higher high, higher low here, bounced off the fib, the overall market of oil currently is still to the downside. So it's a little bit concerning. I'm not overly convinced that this is the best trade to be in. So if you're not in this oil buy, I know Nick's in it as well, but to be honest, yeah, not the best at the moment, in my opinion. Actually, let me again just pull up some fundamentals here for it. Oil, that's gold. Oil prices have experienced market increase driven primarily by escalating geopolitical risks in the Middle East. The price of Brent crude has approached $80 a barrel, reflecting the market's addition of geopolitical risk premium amid concerns about potential disruptions to global supply chains. The heightened tensions in key oil-producing regions has raised fears of significant supply interruptions, thereby boosting prices. In addition to geopolitical drivers, oil prices being buoyed by ongoing production cuts from OPEC. Now, this bit's a little bit, what do you call it? Misleading, I think is the word, because yes, the production cuts have been paused, but only until December. It's not a case of, oh, they've, you know, production cuts aren't happening. Oh, sorry, a production increase is being paused until December. So it's more a case of, when is oil going to start heading to the downside rather than if? In my opinion, you know, that could change next week. I don't know. But yeah, at the moment, that's where I stand with oil. Entered 2642 on gold. Well, I can't give you a suggestion because I don't really know if you're buying or selling. If you want me to look at a trade you've taken, you need to tell me if it's a buy or a sell, your entry and a stop loss, and I can mark it up and see exit points and things. James, I have a very basic and silly question. Like if I put a buy call in a spot market and either win or lose, where is all the money coming from or going to? How does it work? Okay, that's not a silly question. Don't worry. It depends exactly on, your sort of method. But generally speaking, because I'm in the UK, I'll speak about CFDs because that's what I trade. So a CFD stands for a contract for difference. And that contract is between you and your broker. And essentially, I made a video about this actually, which is one reason I don't believe in these liquidity grabs or retail stop orders and all that sort of stuff, really, because a large majority or a large portion of retail traders trade CFDs, and our orders don't get put into the markets. Our orders are literally just a paper contract between you and your broker. So if you lose, you pay them. If you win, they pay you. And that's just how it works. So this is specifically of trading CFDs. Let's say I have a sell here, I close out. That doesn't mean I can then go on Twitter and say, thanks for liquidity, retail traders, because they've not done anything. I got the money from the broker. My order was never actually in the market in the first place. Same with prop firms. Prop firms are all just demo trading. I'm sure you guys know that, but yeah, there you go. So yeah, your money will come from the broker. It goes to the broker. It comes from the broker. Yes, I do spread betting, Squeaky. That's why I do spread betting, tax advantage. I have one account, which is on MetaTrader, which I use more for public showing and things. And I have a private account that's with, spread betting. Look at GU. I think it's going for a sell. Yeah, it does, but I don't want to sell into this level of support that we've got. If I was going in for a sell, I'd really want to see a break and retest the downside. And then maybe I'd be interested, but right now it's a little bit too risky. GPJPY now, buy now is a good idea. Maybe. I'll have a look in a second. Help me understand how you came to the conclusion of a short position on gold. Okay, sure. Actually, let me go back to the other question. I'll go to the gold short. So spread betting in the UK, I use IG markets, or IG spread betting, I think it's actually called. They're great. They've got a nice little widget you can put on your home screen so you can see your P&L, so you can have heart attacks throughout the day. And I think it's CMC. They have spread betting as well. You could also use IBKR. Interactive brokers are great. Interactive brokers are probably the best one, but it's a little bit complicated to use. Anyway, let's go back. So short gold is a good question. So I'm short gold because if we look here, we've got the fib level that lines up. So technically, pretty good setup, although I'm selling into an uptrend. So I am counter trend trading, which is a little bit of a rule break on my part, but it is what it is. So selling the retest of this level again with the 0.5. We've also got, oh, hold on a minute. My edge finder's changed. Guess the things. Okay. Well, gold was bearish on the edge finder for me. I think I showed you guys at the start of the stream, but it's disappeared. So gold was bearish on the edge finder, but also we're in Q4. So we're heading into the end of the year. Gold's had a huge run this year. So I'm looking really to capitalize on some possible profit taking. This exact trade might not be it. Maybe I'll have to try a few more times, but yeah, looking for some profit taking as well. We also have the US data that's come out quite positive. Quite negative, but overall I'm still quite bullish on the dollar. Seasonality, of course, seasonality is bullish for gold. I mean, look at gold. Why, historically it always does go up, of course. But it is what it is. I'm quite happy to take the risk. I only risk what I can afford to lose. It's not a problem. What time frame? I use every time frame. So I use the weekly, the daily, the H4, and the H1 for swing trading. Then for my day trades, it's a good thing I didn't enter that, isn't it? Let me get rid of this. So for day trades, this is the H1, this is the 15 minutes, and this is the daily, just so I can see the trend. But yeah, I use almost every time frame. What's my take on Ethereum? I literally could not tell you. I don't trade crypto. Gold is -3. Yeah, it was -8 earlier for me anyway. I don't know if that was a bug or it's changed. It might have changed with today's news. That's quite possible. Am I dropping a free trade today? Well, I was looking at NASDAQ, but that's not valid anymore, so probably not. Can you see GBP/JPY top setups? I mean, we've covered pound yen a few times, but really I'm just looking for the break and retest here. So I'm just a bit cautious buying pound yen right now. So yeah, just looking for a retest. I'm just going to check the time here. I don't want to run over into someone else's segment. Okay. I've got about 20 minutes roughly. I think Nick said it became -7 about an hour ago. Yeah, that's what I saw. But it seems to have changed recently, which is fine. So NASDAQ, yeah, I mean, I'm only looking to buy NASDAQ really. Very clear uptrend. You can see the position here. Really screwed me over, actually. It was fine, and then we had a huge drop, or well, a relatively huge drop just to my stop, and then it, continued up. I think I was stop hunted by the algo. No, I'm joking, obviously. But yeah, I'm quite happy to continue buying NASDAQ, the S&P, and Dow. Dollar Swiss. Still doing almost nothing. I've been looking at dollar Swiss since, yeah, probably the start of August, roughly, because it's just so flat. Really, like what? Yeah, there's not really anything here that I can do. Economic wise, again, there's nothing there. I'm relatively bullish on the dollar. The Swiss also seems to be doing quite well. So it's like two strong currencies. Fundamentally, technically, there's just range. So yeah, there's nothing on dollar Swiss. Sold EU around Tuesday high. Do you think I should hold into the positive dollar data or quit the trade? It depends on your risk and your appetite, because I'm looking to go short on euro dollar. Let's see, where's euro dollar here? The problem is right now, technically, it looks like it will be having some sort of pullback. To where, I'm not sure. But yeah, it really does depend on your stop loss and where you entered, and if you're willing to hold some drawdown. But yeah, I think we will see slightly higher price, possibly to this 50% level, and a continuation to the downside. Please check silver. Yeah, you can check silver. Yeah, let's have a look at silver. Silver actually looks like quite a nice buy. I actually might buy silver. Okay, well, this might be the free source for today. I might go in long silver here. Got the H4 candle about to close in 4 minutes. So let's have a look for profit levels. Yeah, there's nothing really there. So yeah, I might very simply just buy silver, no take profit, trail stops. Price has just bounced off this 200 moving average on the H4. Still in an uptrend, really. I mean, we have kind of broken and created a lower low, but that's not really too relevant for the way I trade. So yeah, possibly. Let's have a look at the H1. Yeah, it doesn't look bad. It would also offset my gold loss as well. Not many times you can short gold and long silver. Well, I think my gold trade's been stopped out or close to getting stopped. Let's see. Yeah, it's not looking great. So if I can enter a silver trade, it might mitigate some risk and sort of hedge that commodities move a little bit. Check oil. Yeah, I'm in oil actually, so that's convenient. Flat, really, there's nothing going on in oil. Yeah, I mean, I think we'd really need to see some sort of catalyst come out of the Middle East to make oil or to give oil that kick that it needs. I'm not saying that I want that to happen, because obviously that would be quite tragic for human lives, but obviously just talking fundamentally, that would obviously really help oil get back up as we see concerns coming about supply. But at the moment, it's kind of quiet. No hate, bro, but where is Nick? Everything I click is not him. Can't call be two separate channels. Gully, this is a it's like a community stream that Nick does every day. So Nick comes on, I think, at the start of the stream, at the end of the stream, and he has guests on throughout the day. So that's the way it works. If you want to see Nick, just rewind to the start of the stream and you'll see him. Lol, market always goes against our prediction on gold and silver. No, not always. I've had some great plays on gold. So this is the day trades. Not too bad. I've had three winning trades on gold in a row, so can't complain after one loss. But yeah, Nasdaq. Maybe might get into Nasdaq, and I'm very tempted to get into silver as well. Okay, give me a second. I'm just going to load up MetaTrader. Any advice on euro dollar? Wait for a pullback, but I don't give advice because, that's risky. I'm not a financial advisor. Let me just make that very clear. So yeah, silver looks pretty good. Might go in with a tight stop. Nasdaq also looks quite tempting. Yeah, okay, interesting. What do you guys think? Should I buy silver? So yeah, euro dollar, just wait for a pullback. It's way too low to start trying to sell. If you're looking to buy, now might be the time. But fundamentally, I'm more short. Do you use VWAP? No, I use moving averages. Simple retail trader over here. You guys shouldn't buy silver. Interesting. Can anyone tell me why? What do you guys have against silver? I'd wait for silver until your GPSL hits. Oh, gold SL hits. Yeah, well, not confident about that one, because as gold's moving up, silver's moving up. Missing potential there. You guys are losing me money. I'm going to start putting a Stripe link in the chat when I come on for donations. No, I'm joking. Yeah, I don't think I'll be buying silver, though. Might just focus on NAS. But MetaTrader's not working, so it keeps freezing. Hi, James. You still looking at platinum and palladium? No, they're not really assets that I trade. I looked at them for some people on stream, but it's not something I would really pay attention to on my own. We can have a look at platinum, though. Is it XPT? Yeah. Well, there you go. That just goes to prove I don't trade platinum. So this is one I was talking about on stream, but luckily didn't take it. Yeah, it's just it's kind of following all of the other commodities. So we've got, you know, gold, copper, silver, and obviously platinum starting to fall off. So the steam train has ended. Well, the short-term steam train has ended. It seems, yeah, not interested at all here. Bobby, we've already covered dollar Swiss, and I'm fairly sure I covered it because you asked. So feel free to rewind. Dollar, let's see what the dollar's doing since we've had the news. Not much, actually. A lot of indecision, very flat. Trying to trade this, kind of ugly, really. So there you go. Kind of quiet markets, really. It's like we've just had a storm, and now it's cloudy and boring. Actually, that's probably not a great analogy considering what's going on in, I think it's Florida, isn't it? Why is gold rising despite very bearish signal Edgefinder? You make it sound like Edgefinder runs the market. Because actually gold isn't that bearish on the Edgefinder anymore. It was, but since the news we had, it's changed. But yeah, I'm still bearish on gold for now in the short term. So we'll see if we can get something going. But yeah, today seems like this trade just wasn't the one. So far, anyway. But yeah, all good in the hood. We just relax and wait. This trade's been stopped out, so we can get rid of that. So yeah, it looks like maybe 2 stop losses today, which is unfortunate. I've not had a great trading week, to be honest. I think I'm down probably about 3 to 4% actually, which is pretty shocking. Lost 2 swing trades, 2 day trades, all 1% each. How CPI is showing some signs of inflation. Sorry, I'm not. Do you mean how is CPI showing signs of inflation? Because CPI is inflation. It's a measurement of inflation. Anyway, guys, I've just realized we've got about 10 minutes left, and I got a little bit too comfortable there, just yapping on. So if there's any questions or any final charts you want me to look at, let me know. If not, I can give you some economic information. I've got a quick breakdown here, so we can go through that if you guys want to do that. News tomorrow is a good question. Let's have a look at what's coming. Let's have a look tomorrow. Let's do 2 star. So tomorrow we've got German inflation, which will be interesting for the euro. We've got GDP for the UK. We've got the trade balance for the UK. Manufacturing. What else have we got? Unemployment. Really, yeah, unemployment for the Canadian dollar, PPI for the US, core PPI. And that's about it. So let's see what is forecast. So PPI previous was 0.3. Consensus and forecast is 0.2. So that's interesting. Not too much of expectations there. So yeah, we'll see what happens there. I don't really have any thoughts. I don't try and predict news at all. I'm happy to just sit and let it do what it does. I usually trade the trend if it's moving higher, ride it. Jacob, I completely agree. If no direction, then don't trade. That's very good philosophy to have. I agree. I think the problem is there's not always a clear trend, and people will sit and they'll watch and they'll watch and they'll watch and they'll get bored and they'll convince themselves that there is something there. And that is what ultimately leads to a lot of losing trades rather than the strategy not working. It's a case that they're too impatient to wait for the strategy to actually come into play. Yeah, and that can really mess up some things. So NASDAQ, not bothered. It's just not giving me a clean entry there. So quite happy to leave that one alone as we're coming into the end of the week. Oil, consolidating, doing nothing. New Zealand dollar is starting to head down. And dollar NOK kind of, again, moving sideways really in between both entries. Alerts help avoid the weights. Yes, exactly. Alerts are really good, actually, for anyone that does work and you trade. Yeah, use alerts. It's probably one of the most useful things you can do. Let me see who's on after, actually. So you've got, oh, it's Chris on afterwards. And then I'm on again tomorrow, and Chris is on again after me tomorrow. Interesting. So yeah, not being a super exciting stream. Well, my segment anyway, because there's just not too much to discuss really other than CPI. Watch list is flat, poor performance. So yeah, gold. I'm still on the fence. I'm happy to stay in the trade. I'm not going to cut the loss because I think the technicals are still there and my reasoning for the trade is still there. It's just unfortunate that the edge finder's changed because that was quite a big confluence in this one. But we do have, we've got the Dow, the DAX, the Nikkei, the NASDAQ, Bitcoin, and S&P all bullish. So it looks like we're in an indices market at the moment. We've got euro dollar very bearish, which is good to see. So I might start looking to go short euro dollar a little bit sooner than I planned. Dow, let's have a look and see if we can get anything on US 30. Yeah, there's nothing really at the moment here. It's kind of just stuck within this level. Let's see. Yeah, we've not even really had a 50% pullback. So yeah, unfortunately, Dow is not in a position to take any trades, but it's one to keep an eye on, especially for now. It seems like it's going to be a great performer to the end of the year. Bro, your charts are so clean. Thank you. I get that a lot, but yeah, I mean, it's just black and white, really. But yeah, I can't trade with messy charts because I use indicators. I have to make sure the colors are clean because otherwise it just ends up looking a bit too messy and distracting. Do you have a YouTube channel? Yes, A1 guys just linked that for me. Thank you. Gold sell or buy? I am gold sells, but yeah, I'm not certain right now, just because of the candle we've had. This H1 candle is very bullish, but you know, candles don't determine the trade. The fundamentals do, or the drivers do. So we'll see. I actually would be more than happy to just get out at 1-to-1 on this one, really. And yeah, take the profit, reset, and look for a better entry. We'll see. I'm not 100% sure how I'm going to manage this one yet. I'll be honest. I didn't plan that far ahead because, as I said, I took the trade, panicked because I over risked on it by accident, mistyped in the lot size, and then I had to come on stream. So I've not had a full chance to fully plan the management. What time do you usually trade? I trade non-stop. No, well, I'm on the charts all the time because I obviously work from home. I run 2 businesses, so I have charts on one screen, Discord on the other, and then business work and stuff on the other screen. So I'm always online. So very rare that I'll miss a trade unless I'm actually away doing something else. I'm just thinking. Let's see. Update interval. Last updated October 4th. So I'm fairly sure COT is updated. It's updated every Tuesday, but I'm not sure what day. Let's see. Because I know A1 have an automated way to fill out. Okay, so it seems like every Friday. So maybe it seems like tomorrow we'll get the updated COT reports on Edgefinder. So I'll be interested to see what changes. But it seems like at the moment we've got gold is still heavily in demand by central banks. So we know that. Silver obviously following. Dow very bullish. Where is the dollar? Am I being blind? Oh, dollar's here. It's actually lagging behind. I thought it'd be a lot more bullish than it is. We got, yeah, this doesn't seem right. Obviously, the data's right. I'm just saying it'll be interesting to see what it is when it's updated, because I think the dollar is going to shift to the upside. Could quite easily see Australian dollar start to get more bearish. The yen, I would also expect to get a bit more bearish, along with the pound. So yeah, we'll see. We'll see. I stream live in Discord. I don't stream live really on my YouTube channel because I just don't have time. I honestly don't know how Nick does it, because I really find it hard to find time to make videos and stream and things. Yeah. Always happy to have you helping and analyze the markets, James. I appreciate that. I'm glad to be here. The community that Nick has made with you guys is by far the best community I've seen. So yeah, it's a pleasure to be here. But yeah, anyway, I've got a couple of minutes left. So any final questions, let me know. If not, then I'll keep showing some data, and we can see what the background of the markets are doing. GDP is growing. Yeah, that's fine. Labor markets, interesting. So NFP came out. Yeah, obviously NFP did well. Problem is, what is the labor market doing? So unemployment's cooling. Unemployment claims, that's not great. JOLTS, job openings is decreasing. Yeah, it seems like the labor market's doing better, but it's definitely not fixed. NFP was great, but yeah, we'll have to see what next month's results are. But yeah, there you go. So you have other jobs, so you're more busy? Yes. Yeah, I do a few different things. I'm a bit of a digital nomad, I guess you could say is the word. But yeah, trading and elite traders is my sort of main thing. That's what I spend almost all day doing. Then I have a few other things on the side. Any thoughts on Penn? Liam, I'll be honest, I have no idea what Penn is. You're better asking Chris. Chris is a stocks guy from what I understand, so he'll be able to give you something, I'm sure. But anyway, guys, I'm going to head off. I hope you all have a great end to the week. I'll see you tomorrow. And as always, I hope you didn't blow your account during news. If you did, hope you learned the lesson. And I'll see you guys later. See you.
All right, guys. Next, we're going to move along to Chris Pulver when he arrives. Before we go, I do want to mention that while the stream lasts, we are doing a 25% off sale on our Discord and Edge Finder. So make sure to take advantage of that. That's a pretty big opportunity. We'll be dropping a link here in just a second. There it is. And yeah, there's no reason not to at least take a look, because that's pretty good. We offer a lot of services inside the Discord. We have exclusive webinars. We have the Pulver Alerts, which is also 25% off while the stream is going. So that means the stream will probably be going for maybe another hour. So the clock is ticking if you want to take advantage of that opportunity. So while we wait for Chris and we plugged that, I do want to ask a couple of questions, maybe on the content side of things, because as you know, we not only sell software, but we make content for our YouTube channels. And I wanted to ask if you would like to type in the chat, what are some things you would like for us to see, or what you would like to see us do? Any kind of ideas are open. This is the moment where if there's anything in particular you would like to see on the channel at some point, send them in the chat, and I can write some down, and maybe we can get some ideas flowing, some cool things, maybe some things we've never done, maybe some things we used to do. Yeah, whatever you think. This is the moment of feedback. I'm one of the editors, so I will take it and run with it. But yeah, we always try to switch things up in the channel, and yeah, so if you have any ideas, send them to me, because we'll be very appreciative of that. I know there's a little delay on the chat, so if anybody's sending anything in, I haven't seen it yet. But
Hey, everybody in the audience, Chandler is like our editing monster. Him and James both do an awesome job. And I jumped in here for a moment while we fill in waiting for Chris. Please, Chandler, that's a great idea. Leave us some feedback. What do you guys want to see? We're constantly trying to improve content, just make it better for our viewers, for our listeners. We can only do this stuff because we have such an awesome following base here and a pretty wholesome community in the trading world. So definitely share anytime you want. And shout out Chandler. He's usually behind the camera and behind the edits and stuff, but he's always killing it on that side. So yeah. We've got Chris here. Chandler, maybe you and I could back out, give Chris the show here for a little bit. And yeah, guys, again, leave us feedback. We always read your comments. We're always looking at what you're saying. We do read it, pretty much every comment. You might get snarky replies from me, but we do actually look for good feedback within there. So Chris Pulver's up next.
All right, I'm seeing some things popping in. I'll take some notes down, and maybe you'll see your request in a future video. So we're gonna run a quick break, and then we've got Chris. So here we go.
All right, cool.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, speaking of trades, DPZ, maybe one of the easiest $500 I've ever made. This was a trade that I took. I can show the alert here. So DPZ took the trade for $25 credit, closed it out today. It actually closed me out at the open. The broker closed me out at $20. I looked at the trade. I was like, that's crazy. Number one, I thought it was Thursday after market. Turns out it was Thursday before market. So the IV swell just quickly contracted, and that was an easy $5. It was trading for like $18.40. So I updated it right here. 10/10 earnings hit right before the market opened. $20 debit was filled. That was my price target of 20%. Let me do the math on that. So I took $5 out of a $25. So 20% take profit was pretty simple, and that was easy. Now, the max profit and everything, if you keep the trade going, basically it's still the same situation. I mean, if price is where it is and it stays this way through next week, then the full $25 credit can be yours. But if price goes above 450 or below 380, then there's risk in the trade. So that was a really easy trade, and I'm pretty happy that closed out with profit. I want to take a look at it right now in real time just to see where it's at. So that was an 18th expiration. The trade closed out right here. And I mean, even now, like you're getting more and more decay. Like this is ridiculously good. So getting out of the trade, I mean, I am going to say this. The broker filled me at $20, but when I checked the price, it was trading at like $18.50, and I'm like, you sneaky turds, because if I was getting the bid price or the mid price is what I want when I'm doing spreads, and it was trading for like $18.50 or less. Now I was trading for $16.77. So anyway, it doesn't really matter. It's just I put in the order mechanically. 20% take profit was fine, but anyway, that was a nice little chunk. If you're in the trade now, if you took the trade with me, you are looking at a gain. So 25 minus 16.77, you're looking at $823 a contract. So not a bad trade. And all price had to do was not do anything crazy for earnings. And realistically, this is good. The fact that we closed and opened right next to each other is not usually what you see for earnings, right? Usually you see the big reaction in earnings, and today is a big candle so far. But what you usually see is, earnings is down here with a big gap lower, big gap higher. And the fact that we stayed in that area was perfect. Okay. So I'll be happy. I'll stop complaining. I've been complaining all morning, actually, watching the SPY levels on my gamma squeeze index light up and go both places. I'm closing out and taking new trades. So I'm a little all over the place today, even though the portfolio is up. Let's talk about the data. I'm sure Nick addressed it earlier this morning. Any thoughts, any opinions on the news today? I didn't really think the news was super upbeat and optimistic. So I took a screenshot on the Bloomberg economic calendar. So we have jobless claims that printed higher. We have the unemployment claims that printed higher. If I go to, here's Forex Factory. So 231 forecast came in 258 on the unemployment claims. We go to the Bloomberg print for the CPIs because I want to get the year over year for the core CPI. So we have the month over month core CPI was up 0.1%. We have year over year core CPI from 3.2 to 3.3, so ticking higher. And we have the month over month CPI ticking higher by 0.1, and we have the year over year ticking 0.1 lower, but actually missed the forecast. So rather than being 2.3 as the market was anticipating, it was 2.4. So inflation ticking slightly higher. Core, which excludes food and energy, is actually higher. Okay. So I didn't see this as a great thing, but maybe the market's over this whole inflation thing. At least today's price action, it seems to be. So prices today moving around all-time highs and watching these levels closely. Futures market this morning, we haven't made a breakout. As we are trading this morning, I might jump into a futures trade with you today. Not often tonight can I get the trade as cleanly as I want, but because the reaction was so aggressive at 8:30, here is my NQ top to bottom, and I'm looking to see if we get a close outside of it. So I have my 15-minute chart right here, and then I have my 5-minute chart here. So this is the ES feed. This is the NQ feed. I can either trade the ES or the NQ, or I can trade the MES or the MNQ. If we get a breakout this morning while I'm in session, I will be probably taking a futures trade this morning. I do have a couple of trades in. If you're interested, you can take this trade with me. I have a, let's go SPY. I put it in this morning. I really don't love it right now, but this is what I'm doing. I have a long put at 568 and 567. These should be closed. Hang on a smidge. Just going to double check these. What was that one there? Okay. So I got those as okay. That's the chunk of trades right there. So this 375 debit, not looking too great. So for 375 debit, let me see what it's trading for right now. I don't want to bail on the trade, but this is outside the expected move for Friday, and I could probably salvage a small loss here. So 42 plus 33 plus 27. So for the 373 debit, I can close it out for $1.02, and that would be 373. So I take a 271 loss on the trade. I think I'm going to do that. So here's why. Right now, I'm looking at price today. It seems to be pretty quiet, which helps my my SPX trade this morning. I'm going to take a look at that one as well. But the one level that stands out is 580 on the SPY. I had a 570 and a 567. Those are no longer looking as prominent. But let's see. Do I want to save the dollar? I think I'm just going to give it a chance. I'll give it a chance. I'm going to let it marinate. So here's why. If we break this low convincingly and directionally, then we could actually have a decent decline. I do think that any momentum to the downside will be pretty fast and pretty aggressive. We're just not getting really any pressure to the downside. So I do have this trade still running, and I'll let that marinate. So I'm willing to kind of take the full loss here. I'm only going to save myself $1 right now. If price does go down at all, if price goes down, then these will all increase in value, and I can reduce the size of the risk. If they go down a decent amount, then I can possibly carve out a small gain. So these are all to Friday's expiration. So we have today's trading and tomorrow's trading, and I'll see if we survive it. But price-wise, today seems to be pretty quiet, surprisingly quiet. And here's my futures feed. So I don't really have any direction. The one thing I'd be going at if I did take a futures trade this morning would be if we get a breakout, I'd be going right back to this weekly VWAP and trying to move my stop loss. So same thing here. If we break below, there's the weekly VWAP. So I'm trying not to trade too early, but what I look for is this. If we come all the way back up to the same high and we reject, I might take a sell trade early and see if this goes down to the lows and I can move a stop loss in and then try to get a head start towards that weekly VWAP. So I don't necessarily have to just wait for the break of the lows. If we come back to the highs and we bounce and reject off of that, I might take a trade up there with a tight stop loss. So I do want to keep an eye on that one for the morning. Looks like the NQ will do a snail creep up. Yeah, maybe. I mean, this is the 15-minute candle from the news this morning. So if we come up here, I'm going to look for a rejection. And just, I mean, and the price could just stay inside this range. And it could be like just a complete noisy day and nothing really happens. Okay. All right. So keep an eye on that this morning. Domino's is a nice little win out of that trade. Delta Airlines, I think, has earnings later today. Yep. So earnings will be, that's a miss and price is choppy. So just initially, Domino's Pizza and Delta, look at the earnings report. Okay. I mean, the candle itself is pretty big, but you notice how this is not really a massive gap higher or lower. I think if we get these earnings now through October before we actually have the election, everything appears to be a little bit more contained. So this is giving me, I'm leaning towards more selling of these earnings reports as opposed to buying. So as an example, let's talk strategy for a second. If I can get a trade where, let's say price is, I don't know, let's say Netflix. Okay, I'll price out Netflix because that's going to be one. That's going to be one that moves next week. So Netflix is next Thursday, and we're trading at 725. Now, I already have a trade on Netflix for, this is a 111 trade, so it's a 600 by 595. That's an income trade, and I'm also willing to own some Netflix if needed. But if we have an earnings play that's going to be this huge gap up or huge gap down, let me price this one out for a second. So this one usually has a pretty big move, and sometimes it exceeds it, which makes buying options even better because you don't cap your upside. So if I go Netflix, the average move on Netflix is around 11%. And we've had some big ones recently. So 18, 18, 22, 17, 9 and change, 9.92, almost 10%, 10.46, 11.8, 12.8. So the average is 11.89. If I want to be really, really conservative, I can say 11%. Well, 11% of an earnings move on a $726 stock is an $80 move. Okay, that's a lot. An $80 move is a lot. So what I want to see is how much is the broker going to charge me? What are the market makers asking for? What's the premium priced at if I'm looking at an $80 move? So if we go to Netflix, which is next week, earnings is on the 17th. I wouldn't do an expiration on the 18th. I'd probably go to the 25th. This is only priced out to be about $64. Okay, so I'm looking for about an $80 move, and the market maker here is showing about a $64 move. So if I bought the option, it's still going to be expensive because it's a $700 stock. But if I bought the option, chances are I can get to that $75 or $80 price point and turn this into a win. So here's an example. If I were to buy the 727 call and then buy the 725 put, so I'll kind of go one strike above and below center price, this is going to ask me to pay $63.50. But based on the averages, and here's what I want to check before I'd say like, oh, this is a great deal. I want to see how many times in the last 10 earnings reports have we at least gotten to 11% in Netflix. So if I can see that 11% has been hit at least, 6 or 7 times out of 10, chances are we have a good enough probability to say, okay, I could consider going long the option, and price does make that, $75, $80 move. If we have a bigger move than that, that's bonus. That's the big bonus. All right. So let me check something really quickly on this piece here. Let's go post earnings. And how many times do we get to 11%? Not there. Not there. Yes. Yes. We get to 10 and change, 13 on the final day. I'm going to say no. No. Yes. Yes. This one's the final day. I'm going to cross that one out, and then yes. And in typical fashion with earnings, it's a coin flip. 5 times we did, five times we didn't. So do I want to waste or spend or risk $6,000 on this trade? No. So what I'll probably end up doing is using option spreads. So what I could do on Netflix would be something like this. I could take a in the money, if I go in the money bull call spread, in the money bear put spread. So I would buy a call, sell a call, buy a put, sell a put. And if price exceeds those levels, I try to have, you can usually set these up where you can get like a, close to a 3-to-1. So you pay for it. It's a debit, but there's no risk of assignment. And if you're right, they pay bigger. And if you win one, lose one, you actually walk away net profitable and you can play both sides of the trade. So something like that is something we can price out next week for Netflix. All right. So anyway, that's for us to discuss more next week, closer to earnings. The big earnings we have today was Domino's, made some money on that one. Tomorrow, our financials, we have Wells Fargo, JP Morgan. I did take a look at those. I don't know, I might actually look at selling some more premium here. JPM is 213 right now. Let me see what the option trade looks like. So JPM, expected move, earnings is tomorrow, should be pre-market. Yep, so it's going to be tomorrow morning. And I don't think this is going to be a huge mover, but let's find out. JPM, and then I'll go through some analysis, see dollar yen's being requested. If you have any other charts or questions, let me know. Watching, I'll just keep checking my futures prices here for NQ and ES to see if anything's giving us breakouts. SPX on the day is pretty quiet, which is annoying, kind of. SPX on the day, I got out for a small break-even trade, and right now it's already profitable. Son of a gun. Well, that's annoying. All right. 1 second here. Okay, so top down, let me get rid of some of these moving averages here. I'm going to price out a JPM in a little bit with all of you. I'll keep spot checking my futures trade. We're leaning a little bit lower now on the NQ. I've got Heikin-Ashi candles on my feeds here for the 5-minute to try to keep the trend bars really simple to read. I would rather, like I said, I'd rather not sell the lows, but if we get a nice clean breakout that's fine. I'll see how that volume plays out. Pen, dollar Swiss. Yeah, sure. So I'll do dollar yen, dollar Swiss. Pen is in Pen Gaming. I have one client that gave me a pretty trashy portfolio that had Pen Gaming in it, and not in a good way. So Pen Entertainment. Here's what I'm going to look at. Snowflake analysis. Do they make money? Okay, so a couple things that are positive here. Earnings forecast to grow a ridiculous amount, trading well below estimated value. There's a lot of potential here. I mean, price to sales, price to earnings are terribly low, which is fine. This is pretty impressive that based on the discounted cash flow model, it is completely undervalued. But I don't know what it's going to take to get this thing to turn up. Okay, now I look at this chart, and I would be more concerned if I looked at it fundamentally. The stock's down 90% from the all-time highs, which during COVID, I mean, you talk about a potential $3 trade to $100 and some dollars. I mean, who wouldn't love some of that? But this is why you can't fall in love with a stock. And this is why, truthfully, if you want to be a long-term investor, buying the haystack is a lot better than buying individual stocks. And the reason why is this. This thing is up thousands of percent. Okay? It is up 3,700%. But none of that matters when you're sitting in a 90% pullback, right? Even if you were the most disciplined trader of like, oh yeah, we've got past resistance here. We got a Fibonacci 5.0 and 618. It's going to go up. 90% pullback. Buy the haystack. Okay. So is there potential here? Yeah, sure. Is there risk in the trade? 100%. So I look at this chart and I would say if we're carving out a floor, that there's ways to have some exposure. I don't mind putting in a trade on Penn only for income. Okay. If I buy the shares, they could go to zero. If I sell credit spread, or if I sell an option and I can collect some income, I don't know if the premium is going to be good or not. But if we just go up directionally, once we get this confirmation of like, okay, how long does it take? How long does it take for this to break a trend line? How long does it take to break a trend line? Maybe this is what the stock is doing technically. It's just getting into this big wedge, right? Connect the lows this way. Let's say we connect the highs this way ish, something like that. Well, this could spend, just like it over here, lots of time going sideways, lots of time going sideways, lots of time going sideways. So if I can get something out of the way that at least helps me generate some income, that to me is a better trade than trying to hold this thing directionally. I have a client that's in probably a $20,000 drawdown when I absorbed his account, and Penn Gaming was one of them. I'll show that right here. So I believe it's this account with Penn, and there it is. So Penn is down $34,000. So what am I doing? Am I doubling down on this? No, I'm just waiting to see if this account will ever get back to a break even or better. So I've got a limit price here at $60. Okay, now $60 is where? On my chart, $60 is this really nice inefficiency that if we have a liquidity grab, I'd love to see if it comes back to find this inefficiency. So would that make some money? Yeah. 700 shares. Do the math here. If I have 700 shares at $60, that's 42 grand. Well, I'm in a $34,000 drawdown. That makes $8,000 of profit. So is it wishful thinking? Yeah. Is it going to hit there? I have no idea. But if I want to take a trade on Penn, I'm actually quite surprised that this snowflake analysis is decent. There's no risks in the trade, even though the stock's down 90%. The one thing I'm surprised with is it doesn't say. By the way, does anybody know if Penn Gaming was a SPAC when it went live in the market? Was it a SPAC, or has it been around longer than that? I'm just curious, because there's still like this weird like punishment for SPACs since like 2020, 2021. SPACs were like the easiest trades in the world because it was like the fast track IPO, and then they turned to absolute trash. So anyway, I don't know if it was or not. Are you that client guy? So I'm surprised that it says, there's nothing about like cash flow. There's nothing about, level of debt. There's nothing about unprofitable. So let me check one more thing here. It Barstool Sports, and that's why it pumped. Okay, let's go to Penn. So cash wise, we have it. We do have some. So they have debt. Earnings, forward price to earnings. I'll look at like 5 years. So this year, earnings per share. Next year, earnings per share. 5 years out, realistic. Insider ownership, okay. I don't know. It looks okay, but it has some cash. It still has a decent amount of debt, but it's not a flag. I see a lot of stocks here. I was trying to think of one. I can't think of what it was. Maybe is it SoFi? Maybe it's SoFi. Like this stuff makes me nervous, right? It has less than 1 year cash runway. I did this a couple weeks ago. I just can't remember what stock it is. RKT. No, that one's okay. I basically look for something that doesn't make any money. Like, oh, not going to be profitable for another 3 years, or earnings are decreasing at blank percent per year for the next 3 years. Stuff like that is like I stay away from those stocks. So anyway, while we're talking about this, I'll just take a look at the trade itself. We have weekly options. If I were to go out and say I'm going to do a leap, okay? So I can go out to June of next year, or I can go to January of 2026. I don't really want to take this trade, but I'm curious. Let me see. Right now we're trading at 1850. Well, I could set up a ratio spread that if I sell that 1250, okay, so I could get 52 cents credit on the trade and own the shares. I probably won't take this trade because it's not giving me enough credit. But if I own the shares, it'd be 1250 assignment minus 250 on a bear put spread minus another 52 cents. I could own the shares at $9.48. Now, does that mean it's a good thing? Not when the stock was $4 during COVID. I mean, the lows that I see here recently that we've started to carve out some base is around, I'd say like $15 or $14. So realistically, I think a simple trade would be this: if you didn't mind tying up the capital, sell a put at 1250. You get $1.26 credit, and there's two ways to trade this. One is if you say yes, I'll own the shares at $12.50. Well, if I took the assignment, I'd own the shares around $11.25. That's cheaper than the current base we have, which is the low around $14. Okay, so I'd own it around $11. That's okay. But the question is, how bad does this stock get? Right? If it comes down to take out the low and it takes out this low, I mean, I would say this type of price action would be better to then say, okay, maybe I could put in that put, but there's still risk in the trade. So I think my exposure is through the client that already has it. If I can get a squeeze to $50, $60, break even's great. $60 limit target is $8,000 in profit, but a lot of good things have to happen for that to be the case. So I don't know what it's going to take to do that, but here's what Nick and I actually talked about this week. If we see the market as a whole is so excited to be in a bull market, guess where these like flows go? They go to stocks like this, right? Stocks that have been down 90+%. The pure value that's out there of like, this stock's down 90%, buy it, And if this stock, even though fundamentally it may not be the greatest thing ever, if stocks like this turn into these big hundreds of percent gains and thousands of percent gains, there's going to be a top coming at some point, And I swear, if we have NFTs coming out of the woodworks and all of a sudden becoming popular again, which I don't think that'll be the case, but something along those lines of like people are throwing money at just absolute garbage, then I'll be concerned that a top is around the corner. That was 2022. 2022 was a pretty harsh reality, and that was mild, by the way. 2022 was a mild bear market for 25 to 35%. It can be way worse than that. All right. Anyway, let me get some other charts here. Anything on futures yet? Nope. Still choppy. Okay. Let's take a look at the dollar today. Currency strength chart. So we've got the yen on top, Swiss on top, dollars base, CAD is down, pounds down, and euro down. Dollars in the middle, Aussies in the middle, New Zealand, Swiss, yen on top. Interesting mix today. Pretty quiet volatility on the Forex side of things. So dollar index right here. 103.03. I'm watching this to the 103.50 to 104 level. I mean, the dollar's maintaining a little bit of bid. It's making higher highs on the daily chart. I like this 103.50 to 104 zone. If the dollar's going to reject, that's where I'm looking for price to reject. Right in the area. So I'd be watching price pretty carefully, going down to smaller time frames, looking to see if we have some confirmation, and then start looking to fade the dollar move a little bit. Okay. Oil a little choppy, a little volatile. I said this week. I'm happy I'm out of the oil stuff. I don't want to be with any type of crazy exposure outside of defined risk. Same thing on CL, NG. NG is dropping. I'm still going to trade natural gas if we come back into the low twos. Gold is up on the day, but still, we are getting a bit of a pullback. I'm surprised that dollar's up and gold is up today, but not a bunch. I mean, gold's up 0.69%. Silver, nice little bounce off the backside of the trend line. Hopefully there's more stability here to see if silver will get back to recent highs at 33. Bitcoin falling. I wouldn't mind Bitcoin falling into the low 50s, but we'll see. I know everyone's all excited about this this October move in Bitcoin, or this November, December has been like some of the biggest stretches and biggest gains in Bitcoin. Maybe this year's different. Maybe it's not. I think a lot of this is we've got to get through the market's tension and anxiety of maybe the election. I don't think the election is really that big of a deal. I mean, it's going to happen whether we want it to or not. You're going to have a president you either like or don't like, and you're going to be stuck with a House and a Senate and a president that is probably a gridlock scenario. So that's typically good for the market, and we'll see if that's the case, or if there's one side that wins everything, and that's the problem that I see, because that'd be the potential policy shift. But if it's gridlock, I don't think the market cares. But Bitcoin is flat. We're still in this weird, slow, choppy accumulation phase. MicroStrategy had an interesting move. We did fail at the all-time highs here. We pulled back a little bit. Let me see what the IV rank is on MicroStrategy. I'm pretty interested in. I do think this. If MicroStrategy somehow pulls back to 160, I might put in a dollar cost average position here. I might do $1,000 there and $1,000 there, and then the rest of my income trades. I've probably made $3,000 or $4,000 per account on just trades like this, where it's $2 credit, $7 credit, $5 credit. I've done this every 2-3 months, but I'd like to buy this thing if possible halfway all the way back down here to support, and then see if we get back to the highs. So could I take a $1,000 position, $1,000 position, take a $2,000 cost average and turn it into a decent gain? I think so. I'm ballparking that, but take $2,000 and turn it into $3,000. That's not bad, without having a ton of money tied up into it. Okay. Wheeling an index like the IWM with daily at the money cash. Let's see, money, cash, secured puts, and then covered calls. So are you talking about, do you own the shares, Kyle? Do you own shares of IWM? Or are you trying to just trade and generate income without it? It says cash secured puts is a sell put, covered calls is a sell call. You're essentially looking to you're talking like doing a daily strangle, which is okay, but daily strangles, you don't get a lot of income. So the IWM is going to offer you next to nothing as far as income goes. If you want to do something along those lines, you're better off trading the actual Russell futures market. So if you looked at possibly the RUT or the RTY or the M2K, trading some options and futures, you can get a little bit more bang for your buck there as far as making some credit day to day. Because if I show you the IWM and we did a 0 DTE, I mean it's a slightly higher volatility index. 44 IV rank right now, but if I did a 0 DTE, I mean this expected move is less than $1. You're going to make pretty much nothing day to day. Now, if you're not using it necessarily for income, but using it to lower your cost basis, that's okay. But that strategy you're talking about is probably better served for a 30 to 45 to 60 day expiration. Day to day, it's going to be no good. Okay. That's pending. That hasn't been filled yet. I need price to come, because I want to get filled at 40 cents. Price has to drop down towards that $200 level. Oh, so you want to just straight up put in your sell puts and then get assigned and then wheel out of them? Yeah, I mean, that's a strategy for awesome. That's always a good strategy. If you're willing to own an index, that's a great strategy. So what Kyle's asking about is, if I put in a sell put here and then price gets assigned, okay, and then you put in a covered call, the most important thing is you got to calculate your break even. So if Kyle put in, I wouldn't do it day to day though. I honestly wouldn't, because you're not going to collect enough premium to do it day to day. I would definitely go out 45 to 60 days and then stagger that, because you could go 45 to 60 days, maybe collect $1 credit, $2 credit. And if price goes higher, you're likely not going to get assigned. And that credit you get, you could take a profit on that. You could take your 50% profit and then reallocate it. But if I did that let's say I did it every month I just put in a put and I sell the put. Well, that price goes higher, That's income at this month. I do it again, income this month, income this month. I mean, you could have months and months where you just generate income and never get any assignment. But if you do get assigned, you have the assignment price minus your credit, and that's your break even, and then you wheel your way out of it and just turn a profit. So if you did that on the IWM, totally fine. Do it on the QQQ, totally fine. Do it on the SPY, totally fine. IWM, because it's cheap, it's good, you know? So yeah, it's absolutely a good trade. But like I said, go out farther. Day to day, you're not going to collect enough premium. It's not that good. So if you're going out 30, 45, 60 days, 90 days, you can stagger those trades, where I wouldn't mind doing that trade like every 2 to 4 weeks, but you can keep adding those trades in mechanically. And if you get one assignment, then obviously you're not looking to take the other assignments from other sell puts. But that's what you have to be careful of. You got to be willing. There's a lot of risk in a naked put, right? So you truly have to be willing to, if you take on shares, consider having some protection, because just having a put there and having one assignment at a time, you're not really going to make a lot of income. But you have to be pretty committed to say, I will own the IWM, and just own it. And that's okay. Because this, like the SPY, like the Qs, I mean, small caps have been underperforming, but it is still meant to be an index that goes higher. Okay. All right. So a couple of the questions here. Dollar yen. Let's go dollar yen, dollar Swiss. I saw pound yen. I saw. So dollar yen. These are the pullback levels that I'm watching for. I don't know if we're going to come back and take out lows or highs. I realistically think that if you're a dollar yen trader, you are going to be dealing with some indecision over the next probably 3 to 4 months. Okay. Now, I do see a lot of activity on the Japanese yens like late in the year, like December and January. It wouldn't surprise me. This actually would be a pleasant thing, in my opinion, because this low is in here. Don't be surprised if this is a swing. This is a reversal pattern, and we pull back into this area here and then push back up again. So if I draw this out, here's my bigger swing to the downside. Okay. And then we have a reversal pattern in the mix that can push price back into this area around 152 to 155. I would love for this to be a bigger swing trade where we don't take out the high. We have a lower high, and this actually, destination-wise, is going to go lower. I'd love that trade. And through all this nonsense, this could actually be a really good setup where it's high to low. We have a low to high, higher low to higher high swing. Okay, that could be a nice fancy harmonic pattern, and that's a great spot to look for an entry. If you enter here, stop loss above or stop loss above, your destination could be all the way back down to the lows or down to symmetry. So I do like the trade, but where would I look for the trade right now? If we have a pullback on the dollar yen and this forms a higher low, I think the dollar yen has that trade coming. So there's two ways. Either one, this keeps going higher, 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 higher. I'm going to look to sell that around this 152 to 155 zone with confirmation, or we have a pullback first, a higher low, and then we have a trade to the upside in order to get to that level. And you can box this in, right? You could take this trade right here, go from a low to low to a high, and if we have a pullback, project your symmetry. So it looks something like this: low to high, low to high, higher low to higher high. So there could be this trade coming on the dollar yen to be long and get some confirmation, stop loss below the turn. And then we get to this level here, look for confirmation, stop loss above or stop loss above the major swing. Right? Something tells me that this move we saw in July to August on the Japanese yen was so big and so important that we're likely not going to take out the highs and not going to take out the lows without something more meaningful. So if we have another unraveling of the carry trade, more deleveraging with the Japanese yen, then maybe we can come out and test the lows or take out the lows. But until then, you can put me on record here, October 10th, 10:55 a.m. I think this trade stays between this high and low for months. And so you're going to have to survive in the chop. That's what I think. Yep. So Jacob says it's been hard to trade these Forex. I see it, because the Japanese yen was extremely disruptive, and the dollar was, my least favorite index. I mean, the dollar was crap for months, and then it finally trended for a few months, but not every currency pair was reflecting that straight movement. The dollar went straight down for 3 months. The only trade that looked that good was the euro dollar going up. It was the only one that read the same way. Euro dollar goes up and the dollar index goes down, but the Aussie dollar swung both ways, the New Zealand dollar swung both ways, pound dollar swung both ways, dollar CAD swung both ways. So the dollar index didn't line up with really anything. So I've been really vocal about that. I thought the dollar index was really difficult to read this year, you know. So I will say this though, for a couple of the pairs, I mean Aussie dollar on this chart, look, I don't care what the Aussie dollar does right now, but I will say it if it comes back down to this area here, I'm going to be a buyer of the Aussie dollar. No questions asked. 64, 63, 62, even down to 6,000, I will dollar cost average into this move and buy the Aussie dollar. Now, if it doesn't get there, okay, well, what's next? Does this make a higher low, higher high, higher low, higher high? I mean, is it that type of crap? I don't know, maybe. But if I'm going to ask, like, okay, Price, what do you want to do? I'd love for Price to come back down here, find support, and buy this thing, turn this into a nice position trade, dollar cost average into it, have Price go your way. You can make a ton of money in a trade like that if you're patient, right? Buy low, sell high. That's a great trade. New Zealand dollar is the same thing. I like the New Zealand dollar. Okay, I like the New Zealand dollar. Where? Right here and right here. So right now, do I want to do anything with it? Nope. I don't care. I missed the trade at resistance. I'm not that interested. But if we end up falling down to support, I'm interested here, and I'm interested in building a position. So from 58.60 down to 5600, I could space myself in every maybe 100 pips or so and have this thing turn, get back to all this choppiness around 6100. That's a good trade. Get back to this high at 6,300, 6,400. That's a better trade. But you can buy in small and you can add and you can turn this into a huge winner. I love that trade. Dollar CAD, same thing. Like these are trades that I will be watching. I love these trades, but you notice how price has to come to me, you know, and this is the hardest part. If you're not patient with some of these big position trades, you get bored and then you get antsy and then you feel like you got to force trades and find something else. And you're staring at 28 currency pairs and you're like, oh, this looks good enough to trade. I'm over that. I want to trade what looks really, really high quality. So dollar CAD, again, I want to trade it. I want to sell it here. I want to buy it here. Okay. I was thinking that this little sell-off would just be a pullback and we could see the dollar CAD go lower if oil prices jumped up. Oil prices are choppy. CAD economy is a lot worse off than the dollar right now. The Bank of Canada is way more dovish than the Fed is right now. So there is a chance, by the way, this has been a multi-year range. I want you to put this trade on your radar. If this trade goes to the highs and shows a rejection, that's a nice sell trade with a tight stop loss. If this trade gets above 4,000, do not hold short positions. Because something tells me that if we break above 4,000, this thing has been in a multi-year range since 2022. This range could be a breakout, and this trade's going to 145. So there's two trades on the dollar CAD. Either we get a sell trade at the top, or we get a buy trade at the bottom, which seems like it's way far away, or we get a breakout above 39 to 4,000, and this thing is going to make its way up to freaking 4,500. And that's a nice, easy breakout. Because we've been sideways and we get a clean breakout, we just measure the move and it's going up to measure that. You know, it's the same measure move. We go from this low to high, okay, and then you stack that on top, and there's your dollar CAD. So if it gets above 139.50, 140, and it stays up there, I've got this conservatively projected around 4,500 to 4,550. I would love that trade, even though you're buying it high. Right? If you're buying it high, but look at, if you buy it high, let me use a straight line. If you buy it high, but it pulls back, there's your bottom, right? And then you're still buying low on all these continuations to the upside, and there's your breakout trend. If I have 400 to 500 pips of open space with high probability and confidence, I love those trades. So yeah, if I see that trade, we're taking some campaign trades in the pulver alerts, and we're gonna go make a good chunk of profit on some of these big open spaces. Okay. All right. So just a little outlook there. Pound yen, like same thing on the yen crosses. Pound yen, we're probably going to be stuck within a range for the next couple of months. Okay. I had mentioned that this is probably going to hit symmetry. You see that it's really close to that. We have this low, this high, higher low, higher high. I think this grinds out a little bit more symmetry to the upside, but I would expect this to not break the high, not break the low, probably stay like this for a while. And maybe this sets up for a really nice, at some point, like this is a crown pattern to me where this is a left tip, center tip. At some point, this right tip area will hopefully follow through, but we're going to have more deleveraging, more risk off trading. Japanese yen gets stronger, and it's probably not going to be a pleasant thing, right? But there is a lot of potential. The problem is if the Japanese yen doesn't do anything or the Bank of Japan doesn't do anything, this trade's not going to do anything either. So don't get overly excited about holding pound yen short when you're going to pay negative swap every single day, and it could take freaking months to work out. So I'm telling you, man, I feel so bad for traders that are trying to trade the Japanese yen thinking they're going to make so much money. I mean, show me a trader that consistently year after year makes a lot of money on the Japanese yen. Because I know one that does it. And he trades a 1-minute chart on the pound yen and he scalps. That's it. That's the only trader I know that makes money consistently, with the pound yen being one of his favorite currency pairs because it's good volatility. Other than that, if you're a position trader, negative swap is a thing now, and it is a big thing. Like you could get charged as much as $5, $6, $7, $8 a day just to hold this position. It adds up. You hold a position for 2, 3, 4 months, you're down hundreds and hundreds of dollars with nothing happening. So it's just not my favorite. Okay. All right. See some questions on gold. Dollar Swiss. I saw the post earlier as well. Dollar Swiss. I'm still bullish. Okay. I talked about this one yesterday. I'm bullish on the dollar Swiss to try to get back to 9,200. This might take a little bit more of a team effort by the Swiss, not just the dollar. So yeah, I want to see the Swiss get weaker. They've cut rates down to 1%. There's slight swap in that one.
Hey, Chris.
What are you doing? You kick me off?
What's up?
You coming to kick me off?
No, I'm coming to join you.
Man, joining in late, bro.
Are you getting off now?
I was
Thought
going
you
to
go to
I'm good. No, I'm
11:30.
good, dude. I'm good till like 11:15, 11:30.
Okay, cool. So what's been going on with you? What are you looking at?
I'm doing some currency stuff. Actually, I'm getting a little bit more excited about some big currency trades. I just need price to cooperate. So I'm in the dollar Swiss. Here's where it all started. So when we had this crash, I was in dollar Swiss there. I waited for this trend line to break. I'm trying to get back to this pocket. So I started a little dollar Swiss. I added to this trade. Once we pulled back, I was adding more and adding more. And I've been waiting for this trend line to break, adding more down here. So long story short is this. I've positioned myself where if dollar Swiss gets all the way back up to here, every one of my entries that I've taken for the last couple of years is all in profit. So 9,200 is my target, even though I do think this trade gets back up to 96 or 98.
Gotcha.
So if you're willing to hold dollar Swiss long enough, I think we're coming back to 96 or 98. And so
you think the dollar is coming back then?
It's not the dollar, dude. That's what I was saying. It's like I think this is also an effort from the Swiss franc to get weaker and offer risk on trading. If we have risk on trading, the Swiss, the yen, the dollar all can get weaker, but the yen could be weaker. Or I'm sorry, the Swiss could be weaker than the dollar, right?
Yeah,
But to me, this is one positive swap trade that I can take that doesn't have the insanity of the Japanese yen. So I'm going to hold dollar Swiss long, and technically, this one tends to cooperate a bit more. And I'm just hoping that the Swiss across the board is still like very strong. If you look at like the weekly and monthly charts in the Swiss, it's still like one of the strongest baskets out there. So I'm trying to, capitalize on that but I mean, I've been saying that and I've been in the trade since like late 2022, early 2023. So here we are almost a year and a half, 2 years into the trade, and I'm still holding it. So do I look stupid? I don't know, but I'm up like $7,000 or $8,000 right now in Swiss profits, and I'm still holding. And if I do hit my profit targets, I'll probably make, I don't know, I should make probably close to like 50 grand. And that'll translate to a lot of, it'll be, I don't know, maybe $250,000 to $300,000 profit when it's all said and done.
I guess
But
it's
it's gonna
more
take
of
a
an
while.
investment then.
It is an investment. It's definitely an investment trade for me. It's a position trade for me. When I do this, I am probably stubbornly committed to the trade. But somebody asked me in a one-on-one session, somebody asked me, what happens if price goes against you? Well, here's what happens if price goes against me. Even though I have all these entries, I'm still willing to close them out if they look really crappy and close them out in chunks. So what I do is I stay committed to the overall trade. But if I take a loss, like let's say that this first like chunk of trades, if this first chunk goes against me and I'm thinking that, okay, I just need to get rid of these, like, and I trade like this is kind of a bad example. A good example would be the drawdown that I carried on the dollar yen in 2022, like an idiot. Here's a good example. So when this thing went up during 2022, where was it at? Seems so long ago. When did this thing start to rip? Here's the pot. Yeah, this trade, like an idiot. I started to get in this trade at 120. Okay. This is worst case example, but I will show you how I survived the trade. So I started to trade this at 120. When we had this first spike up, I put in an order right around 120, and it spiked up, came back down. Now, I still held the trade. When it went 1,000 pips against me, I closed out for a loss, and I reestablished new positions. So I took a loss here, and then I reestablished new positions, okay? It went against me again. I took another loss. I reestablished positions. It went against me again. I took another loss. I reestablished positions. Now, when I say reestablished, these are like small chunks, and I'm getting back in to match it, and I was waiting for confirmation. And once we started to see this, I started adding more to my winning side. So yes, I took loss, but it was manageable. I think I lost about 3% as this went up. And as this came down, I stacked on 3, 4, 5% of trades and ended up getting about a 10% net winner. So
you just kept taking small positions?
Yep. And that's usually, so when I'm talking about like investing in Forex, I take a lot of small positions. I'll build up, like I was probably in 20 trades or so on the dollar yen.
Why are you trading against it in 2022? Just wondering.
Great question. Well, here's what happened. So when we had this move right here, there was a 200 moving average that hadn't been hit for like 300 and some days. And I'm like, well, that's overextended. We're going to hit like maybe 120 resistance, then fall back in. Well, it ended up going up to like 400 bars, and it still ended up coming all the way back down to it. But what I also did, realizing like I'm a fool by trading this thing short. So I was long on the Aussie yen. So Aussie yen, I'm long. And I was long on the Euro yen, and I was long on the New Zealand yen. So I hedged there, and I was short dollar yen like an idiot that had to survive the trade and put myself through a bunch of stress along with negative swap. So it was not a good thing. And it also was just painstakingly annoying like all year, because I saw that I'm wrong, but that's why I had the discipline to at least close out losses and not let it get worse, because it is far worse. If I took this trade right here, Frank, and I held it all the way thinking like how to come back to break even. I mean, I could have taken 0 losses, but the amount of drawdown I would have dealt with a 3,000 pip move against me is not worth it. I've been in that situation before, like trading the peso and crap back, 10 years ago. But with this move, it's like, look, just cut it. Just cut it. I can always get back in, and then I can work my trade size. So once we started to see this, amounts of manipulation topping here, I started to add more to it. This one waterfalled into a nice little win. And so the loss, I was hedged positively on other currencies, which was good. And then this one, I essentially just fought myself into a profit. So I ended up netting profit on the dollar yen, having those hedge profits on the Aussie yen, Euro yen, pound yen, New Zealand yen that were fine. But I fought the dollar yen and Swiss yen for the entire year 2022. But at the end of the day, I mean, I made money. It wasn't fun. I don't recommend anybody has to go through that. But my point is, this is why the yen sucks, number one. And this is why in the dollar Swiss, if it went against me, I would still have a plan to exit some of my trades and then just let price do its thing. Like, I don't think that the dollar Swiss, outside of like a flash crash lower, which actually would be a beautiful thing. If we flash crash to 8,000, this thing's going to come all the way back to 92 and probably get to a parity level, right? If the market cleanses itself and there's no more sellers, this is going to go back up. Traders may absolutely hate flash crashes, but the reality is they are bottoms and tops in the market that you can make a killing on. But the thing you have to do with the flash crash is you got to survive them. And if you're trading too big, you can't survive a flash crash. So I trade small. Anyway.
Well,
fun story, right? And your question is great. Why were you? I mean, if I showed anybody the dollar yen, you're like, and you're selling this? Yeah, I know. It was stupid.
Well, I was just thinking, like, the reason why I've been bearish on the dollar and dollar yen was kind of for the same reason why I think I would have been bullish in 2022. And that's just around monetary policy.
So the question for you is, were you bullish?
No, I was out of the markets that year for the most part. I held on to whatever I was in at the time. I think I had Tesla. But I was in school, so I didn't really participate or do anything, let alone have like any money to invest.
Right.
So
you can just judge me from afar then.
Sorry, I didn't mean to.
I'm kidding. No, I'm kidding. I deserve it. But like I said, I walked through the trade. I lived through the trade, and I mean, on the positive side, I survived the dollar yen, as dumb as it was. And it just continued to feed my theory, which is I should just never trade the yen ever. And I know 2022 wasn't it. In hindsight, it was an easy year, right? In hindsight, I had so many good trades in 2022, but like the fact that I was dragging that bucket of cement of garbage with me, it put a sour taste in my mouth. And then when 2023 rolled over and I was getting positive swap, I'm like, finally, because I was actually like, all the interest rates were being hiked. So in 2022, you're getting the dollar up to 5+% interest rates, and the yen's at negative 0.1%, and the Swiss is down to. All these things were still like negative swap. It's like, how am I paying negative swap? How am I paying commission for something that's 5% versus negative 0.1%? I was furious with my brokers. And then 2023 day one was like, here's your positive swap. So anyway, stupid stuff. All right, man. Hey, did you
what about gold? I want to look at gold too.
Okay, let's look at gold.
It finally came down very close to 2,600.
Okay. Are you long now?
No, I'm not long yet.
I'm not either. I'm waiting, dude. I'm waiting for 25.50. I'm not trying to get this thing early. Yeah. Let's let it fall.
I guess so. So there's a trend line too. If it comes down 25.85, I'm seeing.
Okay.
25.50 is more so a support level, previous low.
Yeah, I can see that. Yeah.
Yeah, I mean, I can see it. I guess if we have no more big news in the Middle East, this might start to come down.
So you think this recent right where all the Middle East drama was happening and oil spiking, we actually did kind of top out here in gold. So you're saying that as the Middle East conflict resolves or just becomes a little bit quieter, that gold is going to be falling more?
I think it's going to help it to come down. I also think CPI might help because the sticky sort of inflation we saw today could result in less aggressive cuts.
That's true.
So they might be not pricing in such a low dollar after all.
Yep. So the probabilities are still pretty high that we're going to cut 25 by the end of the year. I do believe that the market for all of 2025, I believe the market has taken out about 50 basis points of cuts. So it's basically taken two small cuts off the table for 2025. So we would have 25 and 25 to finish out the year, and then maybe only have 1% all of next year instead of the market was anticipating like another 1.5%, and that's not looking to be the case. So that's been the biggest change for right now, but the probabilities are still very high. This is 88% that we cut by 25 basis points, and then December, this would be a pause.
Yeah.
Yeah. So, I mean, this is interesting that there's even three options here. This would be that we would cut rates by, 25 basis points in November, and then we'd increase rates. That seems stupid. So that's probably not going to happen. Obviously, that's the smallest probability. But we would maybe pause at 13% probability, 86% we cut again.
I kind of feel like they should pause. I honestly didn't even agree with the interest rate cut.
Well, I think they should pause through. They should pause and assess through 2025. If the Fed wants to win the battle of inflation, they should definitely pause in 2025.
And
I don't know why they're going to cut for the rest of the year. I mean, honestly, I'm happy if they're going to cut because hopefully influences a little bit of the 30-year mortgage situation as I'm buying a house. But if they don't cut and they don't cut any more, then I don't think the market's going to love that if we're sitting here at sticky highs, battling inflation, stock market all-time highs. A lot of this upside that the market's seen has been because the Fed was supposed to go on like a 3, 4, 5, 6, 7, 8 cut cycle, and we're talking about maybe having 1 to 3. That's a big change for the market to all of a sudden like backpedal on. So.
Yeah. And it's not like the jobs market is cracking. So
not cracking.
There isn't a real need for a cut.
Is or is not?
There isn't.
Yeah. I mean, we say that, but we saw the job market literally making cracks through June and July. I mean, this non-farm print was like the best one we had seen in like 5 months. So, but continuing jobless claims, initial jobless claims, those are still like historically low. I mean, I think that the numbers too, I mean, they're a little misleading because we have a much bigger population than when we look back and see like the unemployment rate I mean, for the fact that we're at 4.2, 4.1%, that's pretty impressive considering we probably added millions and millions of people to the workforce. I dissected the non-farm payroll thing again yesterday, and it was mostly leisure, healthcare, and government. That's where most of the sources are coming from now. So job reports, government-wise, they could be revised. Non-farm could still be revised. But most of the jobs are coming in the service sector and healthcare.
Yeah. Well, last thing then, what did you want to look at on the S&P? Because I'm wondering myself. I took a bull put spread this morning.
Okay. What's your low? Did you put it right around today's low, at like 57.65 or something?
It is.
How tight are you?
It is 57.70 is the threshold.
Damn, dude. Get right up in there. What'd you pull in credit wise?
185.
Okay. So 315 risk?
Yep.
Okay. What's your I just got to ask you, what's your win streak with these little like bull put spreads you've been throwing on there? I've been just seeing like close for profit. You got to be doing pretty well last couple
counted.
Okay.
If I go on Discord, I can look. So far, I've taken 1 loss.
Okay.
But I don't know how many trades in total.
Yeah. It's been a good couple weeks, right?
It started, late September. So let's see. So the first one was the 24th. 1, 2, 3, 4, 5, 6, 7, 8, 9. So I'm on my 10th one. So
Okay.
I took 8 out of 9 wins.
Nice.
On the 10th trade now.
Nice.
So
Here's my assessment of this is SPX. I would say this based on today's low, which is also the previous 2 weeks highs. If we stay above 57.65, this market is still pretty postured to just stay where it is or maybe try to melt up more. I do think realistically, if we get below 57.65, there is some decent room to have even just the same noisy pullback zone to like 5,700. That could happen like pretty swiftly. But I've said this all week. It's like I can't sit here and be a bear when the market doesn't suggest any price action that's going down. But because we did take out these previous 2 week highs, if it gets back below that, then it opens up the market to revisit the weekly lows. That's all. So that's probably my cleanest outlook on the SPX right now, which is if we just stay choppy, we still have PPI tomorrow. What is that forecast for tomorrow? So we're looking at month over month unemployment rate. So that's Canada. Never mind. That's CAD news for jobs. So we have month over month core and regular PPI. So green, red, we'll see. I don't know if anybody's tracking like a year over year PPI, if it's been higher or lower. I just thought this was an interesting print today to see the market not really react to it at all. I mean, everything was up higher. Jobless claims were higher. Unemployment claims this week were higher. But I suppose 2.5 to 2.4 is like good enough, says the market, as it's just going nowhere today. So
yeah, I mean, it did come down. It just didn't come down as much as they expected. Core didn't move. But
I mean, it did move. Core year over year core is 1/10 higher. So it was sticky at 3.2, but it's up 1/10 higher. So, and that's excluding food and energy, which is supposed to be the Fed's way to like make it look like inflation's improving, but really it's still sticky, man. I mean, we have core CPI over 3%. Now, you know, what is the 2% target the Fed keeps talking about? Is it core CPI at 2%, or is it all CPI at 2%? Which we're not there, and we're nowhere close to
They're
there.
not going to tell us.
No, they won't. But I'm saying, like, that's what's so annoying is, you know, the year over year that's trending lower. I still go back to that truflation reading that is not anywhere close to those lows we saw. And I think that's what our inflation is going to look like. I think the reads that we have in our inflation index are going to look a lot like this. I think right now our 2.4 that just printed is this low. So I'm going on record now in these sessions, like I think our 2.4 is this low, and for the next 3-4 months, this is actually going to go higher.
So having said that,
Yep.
Are you capping? Are you bottoming on oil then? Are you calling that as the bottom?
No. Not,
Nope.
I mean, no, I think that, I mean, the only way that inflation goes down harder is if oil crashes through that $65 floor, which can happen because prior to all the Middle East conflict that was jumping price up and squeezing oil higher, it was Saudi Arabia wants to take prices down to $50. Right now, do you know the U.S. is producing more oil than Saudi Arabia and Russia combined? Like, we are the biggest producer in oil in the world right now. So we have, and believe me, if we want to battle inflation, we need to pump oil like crazy because that's the only thing that's going to combat it, right? But if the Middle East conflict all of a sudden throws off prices, oil's not going lower, but I'm not calling the floor on that. No way. But I think for inflation to be a victory, oil's probably going to have to crash below $60. I think if the U.S. is going to see CPI below 2%, we're probably going to have to see oil under $60. And I don't know what that looks like, because under $60 oil is going to be more of a strain for margins on all these other countries, not for us, not for Saudi Arabia, but for a lot of other countries that are oil dependent. They can't afford to see oil below, $55 a barrel, $60 a barrel. They want it higher,
Right.
And so then you'll have all the games of we're not going to produce it, we're going to cut our supply, blah blah blah. So it's I don't know. There's so many dynamics when it comes to the supply and demand of oil, and then the geopolitics on top of it. But I really think that for the U.S. to have a successful campaign against inflation, we do need to see oil prices continue to fall. So I'm not long oil. I don't want to be short oil. If I was going to be short oil, I would be short at $85 or $90 because I'm not shorting it now. I'm not that interested in it now. I don't think the price is that good. So oil at, $75. I mean, I'm not going to short it there. I want to see if we can squeeze up. If we were to floor here and resistance here, if we have a squeeze up here that's especially inefficient, I would look to maybe take some stabs that way. But if we get through this floor, it's like there's not much to stop it to the downside until like $55 or $50. And I think that's where a lot more problems will arise with how vocal, OPEC's going to be, how vocal other members or oil dependent nations are going to be. That might be a faster, more aggressive migration away from the dollar. It's like all these things play into it. Because this is where everyone can, we can fight about it, but no one's really hating the fact that oil is stable between like $70 and $90. But if it gets lower, causes problems, gets higher, causes problems. So I don't know, man. Oil might be the thing that breaks the market or, causes war or doesn't. And that's a lot. That's a lot.
I feel like oil has bottomed. I would say like in a monthly time frame is probably established that low.
So are you comfortable? That's why I had the $65 levels. I did a $65 put. I did the 65 by 40 or 65 by 64 credit spreads, and I was trading the futures market. But because it became more geopolitical, I'm like, well, this isn't just normal price action. This is, influence. So we had the commitment of traders and hedge funds, and everyone was net short oil. So it was a contrarian trade. But the fact that we squeezed and we didn't take out really any substantial highs here, I'm just, I don't know, man. I'm not that impressed with oil at this time. I don't know. I think it looks decent, but I would not want to have undefined risk on oil. I'll say that because I think there's definitely risk to the downside that could get very ugly very quickly. But a credit spread, no big deal, right? If oil is going to go up from here, that's fine. But I think you and I have talked about this. Oil price right now going into this election, is probably going to be pumped out by the U.S. in a big way to keep prices contained. Inside the $70 and $80 mark, this is kind of my toss-up zone. If oil's between $70 and $80, I don't think there's any clear winner between the election. If we're down below, probably favors Harris. We're up above, probably favors Trump. Why? I don't know. Just because it's usually the incumbent. If oil prices are steady and lower, it favors the incumbent. If oil prices are higher, somehow it favors the challenger.
Okay.
So
I can
anyway,
see that.
yeah. So I think oil right now is going to stay somewhat quiet. And honestly, I wouldn't be surprised if the headlines just start to fade away. Like we're not even talking about this conflict anymore. You know, it's like we still have a war going on in Russia, Ukraine. It's been what, 2-3 years now? It's still going on. And now we got heavier conflict in the Middle East. It's still going on. So anyway, we'll see, man.
And that's the sad thing, is that although it's going on, it doesn't matter unless we're talking about it.
I know. And that's what I'm saying. They just like, yeah, just put it to the side. It's not as important. Let's talk about Hurricane Milton. You know. Anyway. So it's a price to watch. It's going to matter. I am thinking that our 2.4, and I'll come back and reference this. I'll remember this conversation. But if this low is representing the 2.4 that just printed for us right now, here's another thing too, Frank. If China comes out with they're having like another conference or summit on the 12th for maybe this discussion of stimulus. If China comes out with more of like the affirmation and the reassurance that they're going to promote more stimulus and support the economy, then that increase in PMI will also be inflationary. So even though you have economies 1 and 2 in the world that are basically adding stimulus, monetary policy, fiscal spending, government support, that's inflationary. That's without oil. That's without oil being a part of it. So I don't know. I don't know what our 2.4 looks like unless oil is going to crash. That's how I think our CPI numbers get lower. But if we have China supporting and we're resilient and our job numbers getting better and wages are going higher, I think that's inflationary for the U.S. So all that means is moving forward in 2025, the Fed is likely going to be not as aggressive to the downside. They won't cut. The bond market's probably going to suck too, because everyone thought the bond market was pricing in the rate cut cycle, and all of a sudden it switched to, well, now the market's more risk on, not risk off, and so the bond market has tanked pretty much since the Fed announcement.
Yeah.
So anyway, so here is the futures market again. This morning we are stuck within the same range that we had with the 8:30 reaction during CPI. So this has been a very tight trade today. Here's what I'm going to look at probably for the next trade this morning. If we reject off of this high, I might look at this as a chance to sell. I'll probably do MES or MNQ, one of these two, MNQ. If we get a rejection, it just stays within this range. I might get a trade that's about 150 point move on. Is that right? That ES? No, that's NASDAQ. So about 150 point move high to low on NASDAQ, and about a 30 point move on ES.
Yeah, I would say watch the consolidation, because if it stays like this till like 2 p.m. or something, we've seen in like Monday, I think, the price just didn't move.
Yep.
And then
but then afternoon,
we had this huge afternoon sell off.
Yep.
So like 12:45. So starting at 1 was a sell off, and then 2 was the major move. So if we are consolidating, that's what I'm worried about. If we just are not moving, I'm afraid that we're going to start selling off late afternoon, and that's going to really hurt my bull put spread. So just being wary of that.
What would you for any of those trades that you've taken that this is your 10th trade you've had, you don't close, so you let it go, it settle at expiration?
Yep.
Okay.
It's not the best sometimes.
Right.
Because if I feel uncomfortable, I just get out. But
well, if you do the math, I mean, you got 9 winners at, let's say, $1.50 each, right?
Yep.
Okay, and then you have 1 loser at $3.15. So minus 3.15. I mean, if you did 1 contract, I mean, you're up $1,000, dude. Just because you've evolved to great levels.
I was up a little over $1,000, and then I took the first loss.
Okay.
And that was, I think my total now is 800 or 900 something.
Okay.
And then today we'll see.
Yeah.
But yeah, the goal is to win a lot on these
Uh-huh.
because your losers will be, like if I'm taking $1 to $2 credit, my losers are going to be bigger than my winners.
Correct.
So you have to have more frequent winners than losers, and it's almost like an experiment too. I'm just trying to see.
Yeah. Think about the if you can collect 1/3 of the width. So if you go 5 wide and you can collect $1.50 or better, that helps your win percentage. I wouldn't take a lot of these trades at $1 credit or less. I would try to keep to that like $1.50, $1.60, $1.75 credits.
Yeah,
That will
all
help.
my
That'll help
trades,
pad your stats.
all but one, have been like $1.20 or more.
Okay.
Like I've even taken $2 trades.
Good.
But the one that I lost, unfortunately, was the smallest credit I collected.
Yeah.
So that was
That's how it works, man. That's
on
the
a
market.
$5 spread. I lost 400.
Okay.
So
all right. Well, you got some winners to pad it.
gotta be
Let me
nitpicky.
take a look here. So P&L wise today, I mean, I'm fine. Let me actually one thing I didn't look at today. Let me take a look at China. So futures wise, this is what I'm going to be watching for the rest of the day. I'm just going to see if I can get something in the futures market this morning. Maybe it's a rejection here and then a sell trade. Something. I mean, I've got my my Hekinashi candles here on the right hand side. These are 5-minute candles. So if I can see this get up to the high and then go red, I'll probably take a trade right there and just see if I can grab 20, 30 points out of ES or maybe 100 plus points out of the NASDAQ. But if I go to China today, we're back in green. So HSI is up a couple percent. We pulled right back off that 382. We gapped higher today from the close. That's a little bit encouraging. Alibaba is up a little bit. Baidu off the 38% level. FXI bouncing off that 30% level. KWeb off the 30% level. MCHI, same thing. JD, same thing. So, all right, stable. That's better. And then we have more of the news on the 12th, which is going to be this weekend. So maybe we come into trading next week and there's a little bit more support and clarity around what's going on with this China stuff.
Yeah.
So, food for thought.
Yeah. Well, what else?
I saw Trader X asking about euro dollar. On the dollar stuff, I mean, euro dollar, it's the same thing as trading the inverse dollar X, right, or DXY. So euro dollar right now, I look at this. A lot of dollar pairs. I mean, you can see the DXY and the euro dollar potential range. So if I box this in here, I would say that structure looks pretty clean, as well as these lows between 106 and 105. This is probably my trade on the euro dollar. Nothing right now, unless there is a really simple, we pull back here and then we go lower and we continue to have dollar index going higher and we have euro dollar going lower. But again, if euro dollar comes back to 105, I'm pretty interested in maybe buying 105 back to 112. It's just a range trade. The DXY is still in a range as well. I know there's been a lot of talk about like, oh, the Eurozone, we're going back to parity on the euro dollar, maybe. But that was the easiest. I mean, that was such an easy buy trade, dude. Even though it was like, why is this thing dropping from 120 to 96 and it crashed through parity? But this trade right here was so easy to buy. So if we came back down to this structure low or came back into this area to then start dollar cost averaging at parity, I would happily buy some euro dollar at like parity to 98 to 96 and just position trade the crap out of this thing. So right now I see a trade that if it pulls back and it goes for a lower high, lower low, there's a good trade there on the euro dollar, but that means DXY goes higher, which is okay. It can go higher.
It might mean markets lower too.
It might mean what?
Markets are lower too.
If the dollar goes, I mean, I firmly believe that if the dollar goes up, we're not going to be at all-time highs in the freaking stock market. I don't know how that would be the case. It can happen. I've seen it happen with dollar strength and, you know, markets are higher, but like it's usually better when the dollar's weak, the markets are ripping because you've got commodity prices up, you got risk appetite across the board, you got animal spirits like that are going nuts. But dollar strength does not usually translate into stronger stock market. So if you know, this is the same thing. It's the inverse of the euro dollar. So if we pull back here, we go up again. I could see that, but we have lower highs for right now. And so if we pulled back into this area and then reject on the dollar, I like that sell area for the dollar. And obviously I like this sell area for the dollar. I don't think the dollar index is coming back here, Frank. You know, I think we're stuck in this range right now. If it even comes back to test the 107 to 108 zone, I think the dollar index is still, this is a squeeze because it was just 3 or 4 months of trending in bear trap city. But if we come back into the, push up, pull back, push up here, if this starts to get faded, I like that trade back down to the same lows. And if we can break those lows, then that to me is the exciting trade in the dollar. That to me is if we want to see gold rip and Bitcoin rip, the dollar breaks below 100 convincingly, then we've got some exciting stuff happening in probably dollar alternatives. So gold, silver, oil, probably. I mean, anything commodity based. Copper could be pretty solid, but I'd say gold, silver, Bitcoin could be like awesome trades if we're breaking below 100 on the dollar index. So,
gotcha.
But that's it, man. All right, so my tracker for the day, I'll be watching NQ, ES, and probably the MES, MNQ. Same feed, just micros. So this one is a 50 multiplier. The MES is a 5 multiplier. The NQ is a 20 multiplier or a 2 multiplier. Depends on if you're trading the standard contract or the micros. But I might try to make a couple bucks if I get a range trade out of this. It's doable. Tomorrow's CPI tomorrow's PPI will PPI cause bigger. I have no idea, Jacob. I mean, I thought today's CPI was actually going to mean something, but per price action, it's meaning absolutely nothing. But like Frank said,
I think
there
it
could
will
be some
move.
afternoon stuff. Like, be careful the afternoon today.
I think it will affect us. I think I've seen this before where PPI causes delayed inflation reaction. So today it might not know where to go, and then tomorrow, say PPI is higher.
Yeah, that's true.
We could get a bigger sell-off.
Bigger
I guess.
reaction. Yeah, just a bigger reaction. Because that's a good point. Because last week was all employment news, right? And the market digested that as is, and non-farm was a big beat. And then this week it's CPI and PPI, and if they both show stickier, higher inflation, the market might take that as a time to react. So that's a good point.
Yeah, but yeah, I guess we'll see.
All right. Well, man, thanks for jumping on to 11:03. Nice to hang out for 30 minutes with you.
Yeah,
Yep. All right, and good luck on your bull put spread. I'll be watching. I'll try to get a trading here. So if you're in the Pulver Alert section, I might be throwing on a futures trade. So keep an eye on that for the Discord. And I've got a couple of trades on the SPY for Friday and Monday, and then the rest is just trying to stay out of the way and not do anything silly and not overtrade. Be patient. Wait for some levels, and that's it.
Yep.
Cool.
Sounds good.
All right. Thanks, Frank.
Thank you, Chris.
See you tomorrow.
Thank you, guys.
All right. See you, everybody. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.